How to create infinite possible returns with minimal risk. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. So we throw up a risk disclosure. We are not financial advisors or a broker-dealer. I did spend quite some time in the brokerage business. I'll explain that here momentarily. There's also a copyright disclaimer. Okay, this is ours. This is not yours. But the real reason I throw this page up here, and I always mention this because, again, just like I was saying a moment ago, you can ask questions throughout the course of the evening. But I want everybody to know right here, there it is, support at TheoTrade.com. We are based in Scottsdale, Arizona. I did my time in Chicago. You know what? I am done. Turns out that in Chicago, the weather sucks. Even during the summer. Anyway, with that, if you ever need to get a hold of me after this evening, and this is important to me, support at TheoTrade.com. We use a common inbox. Just type Don right into the heading, and that will go directly to me. So again, support at TheoTrade.com if you have any questions. All right, next on the docket tonight. This is why you're here. That's important to kind of denote. Listen, anytime I do one of these webinars, okay, I always want people to be able to walk away, okay, with something, again, definitive. Like knowledge that you can use in the marketplace tomorrow. And I hope that that's all right. So tonight's presentation, and I'm going to let you know right now, I'm going to run beyond an hour. I packed more stuff in here than I've ever packed before. And the reason I'm telling you I'm going to run over, I don't want anybody to be, disappointed in the time frame, except of course the gentleman that's joining us from Germany. That's 2 o'clock in the morning. he'll be happy here at 3:30 in the morning. But the reason is I'm going to pack a lot into this tonight because I want you to be able to walk away with quite a bit. So let me detail a little bit of this. First and foremost, you're going to learn a lot about where edge lies in today's marketplace. I mean, literally like in the last 6-7 months, you're going to learn, not only where the edge lies, but you're going to learn strategy that turns that edge into profit potential. Number two, you're going to find strategy with potential for mass returns with minimal risks. That's one of the things we're going to focus on. You'll hear me actually detail that quite readily tonight. You're going to discover how you can also reduce risk of your portfolio, regardless if you're long or short. All right. One of the key things in tonight is this is not just about, big returns. Okay. It's also about risk reduction. The strategy that I'm teaching you for mass returns is also capable of mass returns against, for example, a 401k. So if you have a 401k, and I'll just give you an example here, you have a 401k with like $250,000 in it or something, and you need a floor under that, a hedge, that's what a hedge is, right? Risk reduction. This is going to be a strategy for you, right? Number 4 on the list over here, determine how one strategy can help creating high return to risk ratio. So this ratio, I'll describe that again, in even the most extreme bullish and bearish markets. And of course, what are the right steps to take, whether you're trading or investing? That's also another facet of this evening. So immediately people get, oh, this is going to be a trading, it's this, it's that. Listen, whether you're a trader, whether you're an investor, pay careful attention. We're going to hit both sides of the spectrum tonight with a very, very versatile strategy that I'm going to present to you. So for those of you, stay tuned right to the end of the webcast tonight. I am actually going to detail an indicator throughout the course of this evening. Now, that indicator is called the auto expected move. The auto expected move is unquestionably, it's the most advanced indicator, ever compiled. And it's an indicator that's literally changed the way we view markets. And you're gonna see this indicator used throughout the course of this evening. However, I don't feel that it's fair to display the auto expected move indicator and then say, you have to pay for it. We're going to provide you the indicator at the end of this webcast. We'll provide you the website, an address that you're going to go to, and you're going to download the indicator. It's a $497 value. And the indicator, is worth every penny of that and then some. And people are, well, why are you giving it away? Because it's the only right thing to do when we're displaying this indicator, because the strategy that I'm going to detail, it makes it a lot easier if you have, this kind of technology against you. So that's our gift to you this evening for staying with me to the end of the webcast. here is the indicator. And again, I don't want to go too much into detail right now. What the indicator is doing, okay, this is very much what we call a quant tool. Okay, it's a much more quantitative tool. And the auto expected move, okay, it's derived from an options chain. These three lines, and I'm actually going to change the color and make it a little easier for you to see. These three lines, what they basically do is this is where the week started. This is the upper edge of the range and the lower edge of the range. And that range is defined by options markets. Okay, so the options markets are saying, for example, here in the QQQ, the options market might say, hey, tomorrow we can move up $4 or down $4. Now there's absolutely no directional bias to that, right? But if we move all of a sudden $6, up, okay, the expected move gets what we term breached. Like there's a breach. There's a breach to the downside. Here's a wicked breach to the upside, and another, it just again and again. You're going to learn about this tonight, because what you're going to learn about this is it displays efficiency or inefficiency in a marketplace. And I'm going to make that it's just as clear as I possibly can tonight, that this is an indicator, not that you might want, you need it, especially in today's marketplace, because otherwise you're kind of, you're out there and just going for it without knowledge of, is there efficiency in this marketplace? Is there lack of efficiency in this marketplace? And that's going to make a lot more sense this evening, and that's why we're going to provide you the auto expected move. And I mean, my feeling, everybody should have and be looking at this particular indicator if in this business, and it has nothing to do whether you trade options or not. I don't care whether you trade options, whether you trade stock, whether you trade futures contracts, even currencies. This can help you extensively. Now, before I go any deeper, little housekeeping item. Listen, tonight I'm going to go deep. This is a skill set. Okay, focus, pay attention. Shut the door, turn off Skype chat. Listen, whatever else might be distracting you. Close Facebook. It's completely worthless. Maybe a phone on silent mode. Kick out the kids. Definitely kick out the kids. Definitely kick out the grandkids. Greatest thing about grandkids, you can hand them back. The dog, though, the dog can stay. Listen, you took the time to be here. And what I'm going to present to you tonight is important. Try to focus on being here. So here's a little bit about me. Kind of curious, for those of you that are brand new, how many people here are brand new, have never been to a TheoTrade presentation before? Okay, and it's okay, just say, me in the chat if you've never been to a TheoTrade presentation before, because I mean, a lot of people, like, again, my name is Don Kaufman, and you may or may not know me. I've been around the financial industry. Okay, now I'm just over 22 years inside of the financial industry, and a little bit of my background. So I watched order flow for 15 years, and it is very much in large part not only why I'm here, but it provides me a very specialized skill set that literally a handful of people in the world have. And I'll kind of explain what that is. So I grew up around traders. I had an uncle that was a market maker in the 1970s, and he was incredible in this business. The legacy of that is not easy to stand up to, but my uncle started with one seat in 1976 on the floor of the Chicago Board Options Exchange. By 1983, he owned over 500 seats all over the world. The firm that he built was called O'Connor and Associates. They sold O'Connor and Associates, and at the time, okay, was one of the largest financial deals ever done in 1992. It was billions and billions of dollars. In 1992, billions was a big number. He sold it to the Swiss bank, which eventually became UBS Warburg. And I kind of grew up around that. Okay, I didn't know that much about it, but in the late 90s, 3 weeks out of college, I got involved in it. I had a cousin that actually worked in Chicago, invited me to clerk on the floor. I clerked on the floor. I traded. They moved me upstairs as a risk manager. And then a few years after trading, I knew a couple of people on the floor, and these guys were, pretty sharp guys, and I really enjoyed them. And they said, hey, we're going to go start a brokerage firm. Okay. And I said, all right. They said, man, you got to get off the floor and not work on the trading side anymore. You got to help us with this brokerage firm. Listen, I was a kid. A kid all of 24 years old. I was literally 24 years old, and I went to work for a company called Thinkorswim. And I said, well, what am I going to do here? And they said, you're going to build the education division of Thinkorswim. And I said, great. Sounds like a plan. I never taught a class like in my life about derivatives, but I knew because I grew up around them. So I went out, started teaching classes, and it was an instant hit. I was on the executive team of Thinkorswim when we took the company public in 2007. I was also on a transition team in 2009 when we were purchased by TD Ameritrade. The deal went out at about $750 million. So it was a decent payday right after the financial crisis. But I also then went on to run education at TD Ameritrade, and their 7 million clients. I exited TD Ameritrade in 2015. By the way, on wonderful terms. Everybody was like, you left? Why'd you leave? Regulations. Okay, regulations, and we knew, when I say we, there's a couple people that work here at TheoTrade. We knew we wanted to get out of the brokerage side of the business, that it was all about education, because we were able to, educate people outside of the confines of a TD Ameritrade. No more red tape anymore. So we did. We left, and we built TheoTrade. But that time at TD Ameritrade and Thinkorswim was the most valuable time in my career because we learned everything there ever was to know about retail traders. And that's what I mean by watching order flow. The bottom line with watching order flow is I got to see everything you ever did as a trader. Everything, okay? If you name a strategy, you did a covered call, I know everything about it. If you did an iron condor, I know everything about it. If you bought stock and put a stop order in, I know where your stop order is likely to be. We studied 7 million clients with big data in every way, shape, or form. There was an entire team to do this. The team was actually called the Nerdery, right? And what you're going to learn here at TheoTrade and here tonight literally comes from watching billions in others' mistakes. More importantly, the knowledge of what actually works best for retail traders. And that's a little bit of my background. It's how I got involved in this business, from trading floor to risk manager to running a portion of a brokerage firm to now, ultimately we left the brokerage firm. We're doing it outside the confines of TD Ameritrade. So this is actually me. I still do some media appearances. I actually did one today. This is TD Ameritrade TV. So that's the last time I was in Chicago. It's over a year now. I also do CNBC from time to time. This is me pitted directly against the man himself. It's Kevin O'Leary. By the way, I'm going to ruin it for you. He could not be a nicer guy. Don't tell anybody. Listen, right now, the markets in general, okay, life in general, we're going through a really difficult time. Right? But there's one thing that gets lost in all of this, okay? First of all, most of you are probably either a little bit quarantined, partially quarantined, working from home. The one thing that you got to realize, you're going through all this chaos, you probably have quite a bit of time because there's more people trading right now on the retail side than ever before, okay? And the thing that gets lost in all of this, and I call it chaos, okay? Every single day is more chaos. The news right now is, I say that the news is unbelievable. No, literally, you can't believe it. The chaos, okay, in this place, you got to remember something. That volatility is good. Because that's what everybody seems to lose, that if you are involved in markets, okay, and whether those markets are going up or down, and I know that bothers people when I say that, okay, but a lot of tonight, this is not about a market that just goes up. I hope you guys recognize that markets do not always go up, but volatility is a good thing. And you got to further realize that this is your opportunity. Like, this is your time to shine, baby, because the moment that volatility kicks in, all right, you got to be on it. You got to be Johnny on the spot. You can't just go out right now and think that I'm just going to buy me some Microsoft and it's going to work, okay? Or better yet, I'm going to buy Tesla and it's going to happen for me. Listen, it's not going to work moving forward. Everybody realizes that what we just went through the last 6 months was just straight up in the marketplace. It's over. It's over, okay? Even the Fed, okay, stated today it was prime time that they're not going to be, pushing that marketplace anymore. They're not going to be there to backstop things. But at the same time, that volatility, it's your opportunity. And that's what we're going to talk about. I mean, listen, This monkey, and I'm talking about myself here, I know volatility trades. And that's what we're going to talk about this evening, is specifically trading in the midst of volatility. So I couldn't think of a better thing. So I worked again at this firm called Thinkorswim when it was a startup, and we when it was a trading group, they used to basically ship out monkeys to everybody, and this monkey thing just kind of stuck with me. So when everybody has asked me, and I'm like, yeah, this monkey knows volatility trades. So yes, I'm referencing myself. I've never put a tie on though at work, so that's going a little bit far. Let's start talking about it. Volatility equals risk. So one of the first things we're going to discuss this evening, tonight, all right here, right now, we are going to talk a little bit about options. You don't have to trade options. You don't have to know options, okay? I am going to talk about options because options are, okay, a great way to be able to handicap future price moves in the market. And I'm gonna explain it this way. I'm actually gonna back you guys into this, and I hope that's okay with you. All right. By the way, my TV appearance today was on TD Ameritrade TV. I do that about once a week. I literally do TD Ameritrade TV now about once a week. I like it way more than CNBC because CNBC makes you go to a studio. I ain't going to no stinking studio. They let you do TD Ameritrade TV out of your house. All right. Volatility equals risk. Let me show you why option markets are so important. All right. So you have a stock. It doesn't matter what stock it is. By the way, I love my fictitious stock. Every fictitious stock for me is stock. And stock is trading like at 200. Okay. Doesn't matter. You can call this Apple. You can call it Microsoft. You can call it whatever you want to call it. I call it stock. Right. So stock's trading at 200 bucks. But stock has options on it. And if you look at the options on stock, there's a call option, right? And some people don't even know what a call option is. So there's a call option, okay? And that call option has a 200 strike. So it's a 200 strike call option, and it's going to be trading for, you ready for this? $4. Now, for those of you that have never had experience with options, right? What's a 200 call give you the right to do? See, options, like a call option, it just gives you a right. If you buy a 200 call, it gives you the right to buy the stock at 200. But that's not even that important right now. Like, what I want you to get about this is this 200 call. It's trading for $4. Now, how did somebody come up with the price of $4? Okay? Like, where's the price for $4? First of all, options are good for a period of time. Let's say that this option is good for a whopping a week. That's it. 1 week. You're like, I have to pay $4 for a week? Yeah, you do. So how is that $4 determined? It's a great question because no matter, people have traded for years. Listen, when I worked at Thinkorswim and then TD Ameritrade, I didn't just go out and run the education division of TD Ameritrade for retail clients. I also taught institutional money managers. Okay, the bar for going to one of our classes, you had to have $300 million or more under management. And we would actually sit down with these money managers and teach them exactly this example, like to a T. Because some of those money managers, they were so like, I don't want to trade options. I just want to be a registered investment advisor and get people's money. Okay. But they never, nobody ever was able to answer the question, why is the option trading for $4? Huh? Because in the end, option pricing comes down to one thing. It's supply and demand. If everybody demands this 200 strike call, price goes up. And if there's a huge supply, meaning that there's sellers, if there's sellers of it, price goes down. If there's not much activity, price goes down. But when everybody demands something, price goes up. So you tell me, what's a volatile stock right now? And I'm going to show you what this is good for, because people look at this first thing and they're like, so who cares that an option's trading for $4? I'm going to show you. I'm going to show you exactly why this matters, right? I mean, what has this risk and volatility been lately in the markets? Like, come on, what's volatility been lately? Anybody? Anybody? What's volatility been as of late in this marketplace? It's dead silent. 1,000 people on tonight, okay? Nobody's actually saying anything. Okay, the volatility, as according to the VIX, all right, it's been fairly extreme. And it stayed extreme, even when the marketplace rallied. It's kind of good. It's kind of good, kind of interesting. I kind of like it. Look at this. Listen, that's what we're going to talk about. What can this do for you? Like when you talk about like volatility, you know, well, what have you done for me lately, volatility? Let me show you. This is a slide that I've used in almost every presentation that I've done for 20 years because it's one of the most important things that you can ascertain looking at a marketplace. It's also, okay, in my experience and 20 years of coming out and teaching classes for retail and institutional traders, in my experience, this is the minimally understood. I'm going to say this the nicest way I can. Most people don't understand this. They don't look at markets this way. And I'm going to tell you right now, you should. And I'll tell you exactly why you should. Every trading firm, every derivatives firm, every bank in this industry is the first thing they teach their traders. If you don't understand this, even in the most junior trading position, you're out, baby. You're out of the contest. What they teach you is that volatility and standard deviation are basically one and the same. Now, you don't have to know what standard deviation happens to be. Here's a stock, right? There's a stock, and it's trading right smack at $100. With me? So the stock is trading at $100, and that stock happens to have a volatility, okay, of roughly 20%. And people always ask me, like, you're right. Volatility is always quoted in percentage terms. Why is it quoted in percentage terms? Because what it really means is that stock, whatever the stock is, this is a $100 stock. It's called stock. Okay, that stock is capable of moving up 20% or down 20%. And you're like, what? Well, what'd you think it meant? Volatility means it can move up 20% or down 20%. And it's supposed to stay in that 20% range 68% of the time. Now that's 68% of the time. I just pulled that sucker right out of thin air. You're like, yeah, where'd that come from? 68% of the time is what we call, okay, it's a normal or what we call standard deviation. Like everything you do, let me clear this for a second. Everything you do in your life fits under one of these distribution curves, right? I always say this, but like really, really good drivers, really, really bad drivers. Then there's Los Angeles, which is somewhere out here. But everybody, by the way, everybody thinks everybody else is a terrible driver. So we must all fit in the meat of the curve. The point that I'm making here is that what volatility, specifically what option volatility denotes, what does option volatility denote? How far a stock can move in a given period of time. Why are you not using this? If the option market, okay, is telling you how far the stock can move, shouldn't you listen to it? That's what options are, and that's what people miss. Option markets handicap future risk. Okay? Options equal future risk. And you go, that's interesting. Why do you think they have an option for a month, for 2 months, for 6 months? See, everybody looks at like, how do I make money from them? You want to learn first how to make money from options? Tell you what, have somebody tell you that options are the future of your risk, because that changes the whole way you look at an option market. Okay, the option market itself, it's crazy when you start looking at it from this perspective. Okay, now bear with me for a second, because this is where things get kind of cool. That volatility, okay, that volatility says 20%. Well, what's 20% of 100? 20% of 100 is $20. It's $20 higher, okay, or $20 lower. Okay, so this stock is supposed to move $20 higher, $20 lower. Can it move outside that range? Absolutely, unequivocally, yes. It doesn't have to move outside that range, but it can move outside of the range, but the highest probability that it's going to be inside that range. So it's $20 higher, $20 lower. That is what we call EM, which is expected move. Drive it into your head. Expected move, expected move, expected move, expected move. Expected move is $20 higher or lower. Here's the kicker. You ready? That volatility is only good for 1 year, meaning that the stock, whatever the stock is supposed to be, it's supposed to move up $20 or down $20, but it's going to take a year for that to occur. Time out! If you know how far the stock can move for a year, could you kind of like divide, for instance, by 12 and figure out how far the stock could move for 1 month? Of course you could. Could you divide that further? Okay, and figure out how far the stock could move for 1 week? Yes, you could. Could you divide that out further and figure out how far the stock could move for a day? Yes, you could. You could even technically figure out how far a stock could move for an hour. Okay? Once you have that volatility, all of this is gravy. That's the thing that everybody misses about this whole business. Okay? Every trader, okay, in this business, right, understands that. When I say trader, every institutional trader, every market maker, every derivative trader, they all understand this. This is what they focus on. They focus everything on it. Why? That's what the marketplace is about. Okay? The marketplace it's not what you just think it is. It's, for the most part, right? It's not about geeking out on math, but let me give you an example over here too. Right now, if you were to go look at something like the VIX, how many people here have ever even heard of the VIX? Huh? How many people? Come on, how many people have heard of the VIX? The VIX, the VIX, the VIX, the VIX. I'm going to pause for a second because I want to know how many people have actually heard of the VIX. Anybody? Anybody? Bueller? Bueller? All right, so almost everybody in here. Like at the now I got the room going crazy, right? Almost everybody in here has heard of the VIX. Good. What's the VIX at right now? Okay, what's the VIX at? So I don't have it pulled up, but the VIX I'm going to guess is somewhere around like I'm going to round it. It'll be about 27 bucks. Okay. The VIX equals 27, but that's a percent. 27%. 27% of what? Right now, okay, where is the S&P 500? The S&P 500. Where is it? Okay. Oh, it's roughly $3,300 product. So if you actually applied the VIX, it's almost 30%. So let's call the VIX even 30. Let's just round it to 30. So what am I telling you? That right there is the S&P 500. What's the S&P 500 supposed to move in the next year? Oh, up about 30% or down about 30%. By the way, what's 30%? Anybody? Anybody? What's 30%? Okay, of 3,300. Just throw a number. So, okay, let me work through that a little bit. Because once you start recognizing this, you're going to go, holy crap! When this becomes like real to you, the S&P 500 right now, close to a 30 VIX, is slated to move 30% higher, 30% lower. And when this is a wake-up call, your entire 401k is going to have a 30% swing. 30%. Now, I want you to apply this to everything that you know about the marketplace, but at 3,300, okay, this thing is going to basically plus or minus, let's just call it 1,000 points. The S&P is going to move 1,000 points, okay? Does that make you feel warm and fuzzy? And I just, forgive me because I rounded it. Does that make you feel warm and fuzzy that that's what the VIX really means? That's what people don't get. When you see a 30 VIX, okay, you should have a little bit respect. And you go, I don't really respect it because I don't know what the hell it means. Yeah, it means plus or minus 1,000 bucks. And right there, okay, newsflash, that's serious. And that's why you need to learn this stuff. That's over a year, but then you can figure out how far the S&P moves for a month, for a week, for a day. The way expected move works is like this. You give me a stock, give me 30 days, I can tell you how far it can move. Give me 60 days, I can tell you how far it can move. Give me 90 days, I'll tell you how far it can move. Okay? That's what it's about. But that's 68% of the time. So 68% of the time, that's the crap that's almost assured. When you start thinking about, like, can something crazy happen out here? Of course it could. Of course it could. Now, give me a really volatile stock. Give me a really volatile stock. Anybody? Because I want to show you exactly how this works. Okay, the first stock that came up is the screenshot that I took. By the way, the first 10 or 12 people all said the exact same stock. No one has said any other stock right now other than Tesla. I'm not kidding you. Okay, there's like 15 people answered immediately. Tesla, 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 Tesla. We have one SPX, and nobody has put in anything else but than Tesla. The irony is, okay, look, I put Tesla in my example. So here's Tesla in an example. And what I wanted to show you, this is 3 days here. Let me actually, let me highlight this in a different color because I like to make sure you guys see this. This is 3 days, the 3-day expected move. Tesla can move $54. It's battery day. It's battery day. By the way, I don't care if it's down 26. I don't care what the price is. Okay. If you have the means to purchase one of these cars, I strongly recommend you do so immediately. I love it. It's ruined every car ever for me. And I really do mean that. Like, I sound like I'm facetious, but I know I really mean that. With 3 days to go, what do you think that number is right there? Okay. Now, the platform that you're looking at, I probably should have denoted this. This platform okay, is probably the most prolific platform ever designed in this industry. This is called Thinkorswim. You do not have to be on Thinkorswim. I want you guys to know that right now. You don't have to be on Thinkorswim. Why? Okay? Because there's other platforms out there now that are pretty damn good. But I'm using Thinkorswim because I worked extensively on this platform. I spent, okay, the better part of 15 years working with developers to come up with stuff like expected move. But a lot of people, like, how many people here are on Thinkorswim, okay, but you haven't really looked at this yet? And you're like, kind of curious what that number was. That plus or minus is expected move, right? If this is on the most prolific trading application, okay, ever designed, you should probably pay attention to it. 24 days from now, that's what this says. 24 days from now, the expected move is plus or minus $100. That should scare the crap out of you. It's only a $400 stock with less than a month, okay? A $400 stock, exactly a month, has $125 of risk. You got to think about this. Like, look, Tesla, okay, it's out here, okay? This is the standard distribution. It's like, oh, plus, okay? Or I should say, this is the minus side. This is the plus side. Don't worry, it's only $125. What's $125 amongst friends when you have a $423 stock? That's a lot, okay? Now, these expected moves are insightful, okay? They're insightful. By the way, only, you know what's crazy? You have almost 1,000 people on, and I said, how many people have ever been on Thinkorswim, looked at the option chain, or you've been on Thinkorswim and you've never looked over here at the right hand side? By the way, this is on Thinkorswim, which is owned by TD Ameritrade, which is now Charles Schwab, right? So this is on Thinkorswim. This is on E-Trade because one of my dear friends for years, she actually left Thinkorswim and she runs part of E-Trade, which is now Morgan Stanley, okay? Expected move is also on Tastyworks, which are some of our closest friends in this whole industry, because Tastyworks, the same guys built, Thinkorswim. Okay, every trading application that's anything has expected move on it, and so few people understand it. So what I did is I took expected move and I applied it to a chart. That's all I did. I took the expected move, and the expected move you're looking at, this is a weekly expected move. Why did I do weekly? Because I want to look week to week. Look at this. This Tesla was supposed to move here. It didn't move here. It moved here. Tesla was supposed to move here. It moved here. Tesla was supposed to move here. It broke upside, broke the downside. It was supposed to move here. It moved out here. Okay, it's a freaking free-for-all inside of Tesla. That's why I wanted to show you that. This all sounds good, right? Okay, so time out for a second. All right, one of my favorite slides here. Yeah, sounds cool. Sounds like a real party. How do you use this crap? That's the one thing like people don't get is like you look at this and you're like, that's kind of cool. Like, yeah, all right, I get it. I get what he's saying. You can kind of gauge by looking at options. Options are gauging how far the stock is supposed to move. Everybody got that part? Okay. There's more to it. There's much more to it. Understanding implied volatility and expected move, it's a step in the right direction. All I need you to understand at this point, and again, I want to recap for a second, because if you don't understand this, it's going to be tough to move on. All I want you to understand is, okay, the stock is supposed to stay in this range. Why is it supposed to stay in that range? Because the option said it was supposed to stay in the range, but it doesn't stay in the range. Sometimes it comes out here and comes out here, okay? And you know what? There's money to be made there. And not a little bit of money. There's a lot of money to be made there. Okay? Because what you have to do is you have to take this concept. Okay, what concept? All right? This concept of, this concept and apply it to this. How does this stuff, quote unquote, translate into profits? Like you got to actually take, that's the one thing. Like there's a lot of people that understand expected move, but then they don't understand how to translate. And translation is incredibly, incredibly important. Again, people always talk about it. I got my MACD, I got my Fibonacci, and I got a secret squirrel indicator that nobody knows. You understand, okay, that I not only worked for, but ran a division of a multi-billion-dollar brokerage firm. And, everybody's always talking about, like, I got a MACD, I got a Fibonacci, I got a Bollinger Band. I know where the stock is going. Just follow me. Follow me. I know everything, okay? It's just insanity, because I'll tell you right now, okay, that's not the way that traders make money in this business. It's just not the way, right? And the reason I was bringing up this billion-dollar firm that I used to work for, I'll make this simple. If there was something that made you more accurate in this business, don't you think TD Ameritrade would have purchased it? Okay? Don't you think Charles Schwab would have bought something? Goldman Sachs would have put a bid out there for $1 billion. Because I constantly, every time I turn on YouTube, this is what you have to do to make money in the marketplace. And I'm like, holy crap, I can't even turn on YouTube anymore because I'm listening to these people bombard everybody with garbage. Okay? Profits are achieved by translation, okay, of edge. And that's what we have to get to. I'm going to bring you into a trading concept less than 1% of market participants are aware even exists. Okay? Even less, figure out how to actually trade the concept. The first thing is know your volatility. Like that's what it comes down to. First of all, know your volatility. The point I want to make with this, there are two types of volatility that you have to understand. Implied volatility. Implied volatility and the historical volatility. Now, I'm simplifying this for tonight's presentation. It's not going to be one versus the other, okay? The point that I'm trying to make over here is this. Options, okay? Options, for example, say, okay, that we're supposed to move up or down. Bear with me here. $8. Options say we're supposed to move $8. Actual stock price movement, okay? Let's say we go down $17. Think about this. It's implied versus historical. Options say we're supposed to move $8. How do you know options say we're supposed to move $8? I just showed you a moment ago. There was that little thing off to the right-hand side that said plus or minus like $8, right? So it can move $8, but the stock doesn't move $8. The option market was wrong. How much did we move? 17. Okay? Does that make sense to you guys? Does it make sense to you? Anybody? Okay? Does that make sense? If the option market says we're supposed to move 8 and we actually move 17, what do you got? What do you got? That's what edge is. What if the markets moved big and continually moved big, but the options did a piss poor job of pricing in those larger moves? Okay, this is actually what we start to talk about, and this can be a wildly for some of you that are like engineers, you might get this, but this is what we start to talk about with terms like fat tails, and we're moving out here, but we should never move out here. We should always move in here, but we don't just move in here. Sometimes we move out here. Okay, all I'm getting to is big moves. Markets do a terrible job of handicapping big moves. Okay, how could we go about finding stocks that are moving more than what the option markets expected? How can we do that? The expected move. Auto expected moves. They visually display a stock smashing through what the options market expected. Okay? In other words, you can see a stock moving beyond what the options market has priced that movement to be. Now, all of this is okay, I get it. You don't get it. Not until you see it. Okay? Not until you visually see it. When I say visually see it, now you'll understand what the expected move indicator is and why it is unquestionably one of the most prolific things that we've ever built. Okay? Because what we did is, here's the IWM. Now, the IWM is the Russell. And I could have showed you a million different products. I could have showed you Amazon. I could have showed you Tesla. I could have showed you, Roku. But I wanted to show you a major index product like the IWM. Because the IWM, there's billions of dollars traded in here. Look, this thing was supposed to move here. But this is the Corona crash right here. Look, the Corona crash. Whoops, got it wrong by a little there. The next week, though, they got it right. Week after that, oh my gosh, they got that wrong. The week after that, they got that one wrong. They got that one wrong to the upside. The market sucked there, was terrible there, was terrible there. Okay, hey, look, that one worked. This one didn't. Do you see all these zeros on the screen? Okay, I ain't done yet. I ain't done by a long shot. Every breach of these expected moves, okay, is P&L. Every breach. When it moves outside of that expected move, you got to understand. The option market said, okay, it should go up or down $8. Yeah, does that look like an $8 move? I'm just giving you, an example. Does that look like an $8 move? Sure, this one does. The next week, it also said it was supposed to move $8, but it didn't. We ripped apart and it moved down 17. By the way, this move is actually even larger than that. Okay, and the next week it did the same thing. And then it rebounded so heavily that it was supposed to only move a little bit more here and it moved to the upside. Okay, what you're seeing over here is the IWM. It should stay inside the expected move 68% of the time. But in recent weeks and recent months, it just keeps smashing through. Okay, and this for me, okay, this is where people constantly complain about the Fed. They go, the Fed is doing this. The Fed is screwing me. How about this? The Fed is putting so much money out there that it's actually tightening up the markets, okay? And the markets continually do things that it shouldn't do. Thank you, Fed. The Fed has actually made the business too efficient. And we start breaking apart the opposite way. And again, this is huge. It's huge. And that's what I'm going to actually focus on. These are what we call outliers. Now, if you've been to any recent presentations that I've done, almost everything focuses on outlier moves. Every strategy right now, it's about outliers, about outliers, about outliers. Because I'll tell you what, what's an outlier? It's a wicked move. It's an unexpected move. Okay, it's an oddball. It's an oddball. It's the people talk about like black swans. Well, tell you what. I mean, recently it's been 6 months of the black swan to the upside. By the way, the terminology of black swan goes into the fact that people have always seen swans. There's swans everywhere, but you've never seen a black swan, unless, of course, you live in Australia, in which case they're everywhere. But that's what an outlier is, okay? I mean, volatility limbo. Listen, the opportunities here are huge. You got to shake off the losses. It's time to make money. There's very few opportunities in this business that present themselves as prevalently as what we're actually going to witness following the Corona crash and all the fallout. And you have to get ready for this now. It's funny because putting this together, I was thinking of people like, what about the presidential election? What about it? It's all priced in over there. Okay? The fallout following Corona is going to be here for years. You got to get this under your belt because it's never been better than it is right now. You got to position your portfolio for a big move. So actually, what I'm going to do right now is I'm going to start to show you trade after trade after trade after trade. And what these trades are going to do, I'm going to show you how to position yourself most effectively for the possibility of extreme movements. But let's actually detail something right now. Let's put something on the table, okay? I want to position you for the continuation of extreme movements. Like, think about this. Are there extreme movements coming? Of course there are. You know that the election is going to happen. But I'm not even, again, the election to me is a sideshow. It's a sideshow in what there is going to be much more fallout, okay? Debt fallout, I can go on and on about all the different fallout from Corona because where do you want to start? A lot of companies they're not going to make it. And other companies are going to explode to the upside. Okay, but the whole key over here, extreme without exposing yourself to drastic risks. You can't get cute. There are literally potentially billions up for grabs. Let me show you, okay, the onset of one of these trades. When I say the onset, I just want to show you on the surface. This is an IWM back spread. Now, I'm going to show you an entire history, my history of the trades that I have done and the trades that I have done specifically involving outliers. The back ratio is a type of a trade that is done for an outlier. This is a trade that was put on March 23rd. It was exited March 26th. It's my birthday! It really was my birthday, March 26th. What a great time to have a birthday. Right at the onset of I think that was the day that here in Arizona, they're like, you're quarantined. Happy birthday! You're quarantined. Like a lot of people have probably gone through that this year. But it was memorable. In 3 days, I had a 20-cent credit turn into a $6.48 credit. Okay? That is absolutely massive. Okay? It's a massive amount to make in such a short period of time of 3 days. But everybody always asks, what's the setup for the trade? The setup with the trade couldn't be easier. And again, if you don't fully interpret what I'm doing in here, these are options, that's okay at this point. Those of you that understand it, look, this is to open, this is to close. What you're looking at right here, this is the exact date and time I opened the trade, the exact date and time I closed the trade. This is the opening transaction, the closing transaction. It tells you it's a back ratio, okay? The exact credit, okay, and or debit, and the exact credit. So I literally opened it for a credit, closed it for a credit. This trade does have risk, okay? But it was a very straight up setup, and I'm actually going to show you the setup for the trade. I don't get too deeply into charts, but here's the setup for the trade. The breach to the downside of the expected move was so violent that we anticipated eventually we'll rally back. Okay, we did rally back. Look, I put the trade on right here. I closed the trade literally right here. I didn't even wait long enough. I closed the trade before it was like, hugely profitable. It was profitable enough for me, right? So I literally put the trade on, took the trade off. You're in, you're out, you're on with your life. But the point that I'm making with here, it's the dramatic and continual breaches. Like if you look at this, somebody's like, well, he bought the bottom and you sold. I didn't do that. I didn't do that at all because I'm going to show you really what I did. Okay, because this is actually kind of laughable when you start getting into it. I put the trade on the 23rd, okay, for a 20-cent credit. Now, when I put the trade on, all right, for a 20-cent credit, I didn't know the market was going to rebound. Like I didn't know, oh yeah, he knew the market was going to go up. The hell I did. We're in the middle of a crash. Biggest crash since in the 1930s. But if the market continued to go down, I still got to keep the 20-cent credit. That's why I did the trade. And if the market bounced back like it did, I'm going to make money. That's why I did the trade. So right here on the 23rd, when I put the trade on, I didn't know we were going to go back up. I just figured it's the right trade because if I'm dead wrong, we'll just keep going down. If we keep going down, I get to keep the 20-cent credit. But if we bounce back up, I'm going to be golden. Does that make sense to everybody? Right? By the way, somebody said, do you have any recent trades? I'm going to show you the history of every trade up until like literally, okay, I think a week ago. Every trade that I've done, because the number of outlier trades that are going on right now, it's nonstop. So I love when people go, hey, any recent trades? This is the easiest thing to show you, right? And we've been able to pick it off time and again. Check this out. The very next trade. This is another IWM back spread. Now we're moving up in time. We're moving on up, okay? Moving up in time here to the April 29th. It's the same exact idea. And again, it's got calls. This one opened for a 43-cent credit, closed it for almost a $5 credit. Okay, what was the setup for this trade? I just want to show you again. What was the setup for this trade? Same thing. It's April 24th. Okay, on April 24th, just take a quick glance. April 24th, right there. Look, we're at the bottom edge of the expected move. We hit the bottom edge of the expected move, put on the trade. Okay, a week later, we ripped. That's it. This is the exact same trade. Okay, this isn't about being like, oh, he's incredibly intelligent. No, it hit the bottom edge of the expected move. I put a trade on, okay, for a 43-cent credit. If we bounce, we make money. But if we dive, I still get to keep the 43 cents. That's it. You got to learn how to do this stuff. By the way, the trades that I'm showing you here are all done in front of the clientele. I always trade. Every trade that I'm doing now, okay, is in front of our TheoTrade clientele. We text out these trades. This is actually on April 30th. This gentleman closed it for a 438 credit. This one closed it for a 213 credit, $1.93 credit, 228 credit. It's huge. Now, let's actually continue on. Okay. The next one, bonds. So in bonds, I'm going to jump forward a little bit in time. And I'm going to show you, I'm going to jump around because bonds, nobody ever dreamed that bonds could even move enough to be able to make money from. Bonds have been dead. Oh, the Fed controls the bonds. Really? The bonds had a wicked breach to the downside, followed by when they breached so hard to the downside, they bounced back up. We'll show you that one here in a second because the bonds, I didn't know what to do in the bonds. So I put a trade on April 29th. Okay, go back under the chart. So April 29th, I put a trade on in these bonds, all right, April 29th, which is somewhere right in this neighborhood over here. Why? I don't know. We're sitting kind of in the middle of the road. And it took me all the way to down here to finally make money on it because I figured the bonds weren't doing anything, that they would eventually do something. So that's the way I traded it, right? When I say that's the way I traded it, I put this one on. This one's actually put. This one's bearish, okay? I put it on, but it cost me 32 cents to put it on, but I closed it for a 98-cent credit. And you go, that's not that good. I had such nominal risk in here, such nominal risk. And we broke to the downside so hard that I actually did, okay, the exact opposite trade, meaning that I took my bearish trade, closed it profitably, and then I actually put on the bullish side of it because we breached hard to the downside. So then I put this thing on for a 25-cent credit, closed it for a $2.10 credit. I just wanted to show you on the surface all that I'm doing right now. By the way, I haven't even gotten to the strategy yet. Hope you guys realize that. I haven't gotten to the strategy yet. And everybody's like, this is just a couple of trades. And you're right. It's just a couple of trades. But all I wanted to do here is light, okay, and shed light on the setup. And the setup of the trade is really easy. I don't know anything, okay, other than if we go down hard, we're likely to come up. As soon as we get, and this is something that you're going to learn, as soon as we start breaching expected moves, okay, when you start breaching expected moves, it's usually sequential. There's not just one breach. There's multiple breaches, multiple breaches, multiple breaches. Good traders learn how to spot this, okay? And they just put the trades on. And it's sequentially putting a trade on like this back spread. Okay, putting a trade on like this back spread. When you do it twice in the same product, do you think that's suspect? Okay, look, put it on the 29th and just waited to what? To June 3rd. Okay, then by June 5th, I'm like, holy crap, this thing broke so much to the downside, I'm going to do it to the upside. Listen. Right now, the future is bright. It's full of risks. I am not suggesting that I can time wild moves in the markets. No one's going to be able to see the future. But I am suggesting having placed the correct option-based strategies, it's going to make all the difference. Okay? You could be 2 trades away from this. Now, this is the first time that I'm actually presenting you. This is the full Monty. Okay? Now, this is not the simplified version. I just showed you a very simplified version a moment ago in the TLT. I showed you a simplified version in the IWM. Okay, but here's the reality. The reality is I am doing more than that. This is a trade, okay, in the spiders and a trade in the VIX. Trade in the spiders, trade in the VIX, and this is its P&L graph. This is the first time that I am presenting to you what is termed an infinity spread. Okay, it's infinity spread because it's infinite, if you will, in terms of P&L. The infinity spread. This is a spider risk graph. This is where the spiders is currently trading. This particular strategy has incredible upside potential, but it also has, okay, incredible downside potential. Now, if you're looking at this, right, and you're thinking, it's not that much money. I mean, listen, first of all, the market just a few months ago was down here at 240. Okay, could be up $3,000, and you're like, whatever, man, it's $3,000. It's 2 contracts. This is only a 2-contract trade. So don't tell it's only, make it 20 contracts. If it's 20 contracts, that's not $3,000 anymore. Is it? Then it's what? $30,000. $30,000. You know how nominal the risk is? One of these trades below is being put on for a credit. The other one is put on for a 5-cent debit. If you net these 2 trades out, it'll what? 31-cent credit to put this beast on. Does this beast have risk? It does. But we can even teach you how to mitigate the risk of the trade. Okay? This is the kind of stuff where people they don't get it. Like, what do you mean? What do you have to get? If we go up big or we go down big, you're going to be okay. And I'm actually going to show you the history of some of this strategy. So before we go, by the way, I'm going to bring the strategy back up after I show you the history of this. All right? And when I say the history of it, I don't want to show you trades, okay, right here, right now. I'm going to come to that. When I say right here, right now, I'm going to show you trades all throughout the course of the summer that follow this exact premise. Clearly, the Corona crash was big. It was big. But the thing that people are missing is this entire summer, it's just been hit after hit after hit after hit, outlier after outlier after outlier. No one has ever seen this many outlier trades. Ever. Not in the history of any marketplace, okay? And the thing is, it's sustained right now. So I want to show you where the history of this comes from, because the trade that you're looking at, the infinity spread, okay, it's not just powerful. If we go up big, the P, okay, and L can be nothing less than magnificent with a very, very, I mean, listen, it's a 2-contract trade. This is a 2-contract trade, and this is a VIX trade. And you're like, the other thing is, people are talking about the election. That's a December VIX trade. Yeah, does that cover the election? I think so. Okay, this is November. Does that cover the election? I don't think so. I don't know when the election results are going to be in, but I'm pretty sure they're going to be there by November. I could have done this one further out in time. But the point that I'm making with this kind of a trade, it's perfect for the election. We go up big, we go down big. Like this doesn't have to be like, rocket science. But the first time people see the option trades, they freak out. Let me show you the history of this. And the reason I say, let me show you the history of this, okay? In the past, you only needed, and I want you to listen to this very carefully, you only needed 1, okay, or maybe 2 of these trades to hit, okay, each year for good profit and loss. You only needed one or two of this trade to hit each year. Look, this trade is done. What? September. What? Here we are in September. This trade's good for September, October, November, and December. This thing is like what? 3.5 months? That's a 3.5 month trade. You only have to put the trade on a couple times a year. Only one or two of these, though, is going to hit each year, right? Historically, except this year. 2020, it's been huge. Let me show you the history. My trades. The proof's in the pudding. I'm going to display to you a number of key events surrounding just the last couple of years whereby markets and volatility did not effectively price risk. But thereafter, then I'm going to show you my current trades because everything has changed. I'm telling you, if I show you the past, you'll understand much more. You only need one or two of these a year to hit, and you only have to put a small amount of capital. People are like, I have 200 grand. Do I put 200 grand into this? No. Okay? Small amount of capital at risk. Let me actually show you. And then I'm going to show you my current trades. When I say current trades, I'm talking here and now. All right? This is in 2015. Now, for those of you that remember this, and I'm going to a little trip down memory lane. The yuan devaluation. I have been trading infinity spreads, okay, for the better part of almost 15 years. I didn't call them infinity spreads before. We called them black swan trades, okay? We called them outlier trades. Always, okay, I have worried about catastrophic risk in the marketplace because I grew up around traders, all right? My family owned hundreds of seats during the 87 crash, and they actually did phenomenal during the 87 crash. In the mini crash of 1989, again, the same thing. These were outlier events nobody saw coming. Let me show you, and I'll start with the yuan devaluation. This is actually Chinese. They devalued their currency in 2015. Big, huge drop in the marketplace, spike in volatility. Okay, now I'm going to show you my P&L. What you're looking at over here, again, is a screenshot. All right, I'm going to take you into the specific trades in a minute. This is a screenshot. That is August 24th, 2015 to August 25th. This is exactly a 24-hour period. If you take a look at P&L down below, there's not a huge amount of capital in here, but that is $17,399 in terms of P&L. Okay, people look at the, all right, whatever. So it's 17 grand. 17 grand in a 24-hour period of time ain't half bad. Okay, not half bad, but that's a 24-hour period. And everybody's like, I knew this guy that made millions. This is real. Okay, this is actually real. That's why I'm showing you the physical account statement, verbatim, where I made the money, where I lost the money, everything in here. And you can even see I did 16 orders and 16 fills in that 24-hour period of time. That's 2015. Continuing on, taper tantrum. Okay, I had to wait another year for something good to happen. Now, this one's actually huge. This is the taper tantrum. Here's the markets chugging along, chugging along, chugging along. It tanked. It doesn't look like that much, but here is the S&P at 210, and then right here, the S&P is at 180. It's a pretty big percentage loss. Volatility doubled. So what I'm going to show you here, okay, this is an outlier. This is a big outlier. And what I'm actually showing you here, this is a period of time from January 1st, 2016, okay, to the end of February 2016. Apparently it was leap year, okay? There's a period of exactly 2 months. If you want to see what's possible, okay, with outlier trades, this one's pretty good. The taper tantrum of 2016. In that period of time, and you can see my P&L, this is year to date, so it's exactly 2-month period of time, okay? I was up 100,000 and change. So $103,780.35, okay? That's that period of time. And again, when people are like, how much was in the account over here? I'll tell you exactly what I was using. To make my $100,000, okay, my margin requirement at that point was 200 grand. That's it. You want to know? Okay, that's pretty clear. And again, this is all the way back in 2016. We're going to come into present time because I want to show you this year because never before we've had anything like this year. This is also in 2016. 2016, this is Brexit. Nobody saw that one coming, right? 2016 was the year of the outlier, okay? In 2016, here's the Brexit vote. The Brexit vote take you all the way to the bottom. This is a 24-hour period of time. It's 6/23 to 6/24/2016. I made 25,000, and I apologize if this is really small, but this is I mean, this is my entire screenshot from Thinkorswim. $25,201.13. Okay, onward and upward. Presidential election of 2016. Okay, now this was an outlier. I didn't catch the down move. I actually caught the up move, and I'm actually going to show you it. Now, this is the first time I'm actually showing you a physical trade. This is where we started calling it infinity spread. It was in 2016 that we actually put a name to it, and we started calling it the infinity spread. And in 2016, I'm actually showing you the physical trades like I was showing you a moment ago. This is actually put on the evening. This is in options on futures. It's put on the evening of the election, and this one's taken off literally the next morning. The trade isn't even on for what? Okay, a couple hours. It's $2.65 credit. I closed it for a $19.25 credit. Huge by huge. The trade down below that, and again, this is all the presidential election. I caught it to the upside. This one's actually put on almost the exact same time here. This one, though, is closed, okay, about 2 days later. So this trade's been on for 48 hours. 70-cent credit, closed it for $30.75 credit. Again, all I did is put the trade on, let fly, all right? It's, when I hit it to the upside, it could have hit it to the downside, but this one actually worked to the upside. Now, moving in more into the present. And again, I want to show you a history behind this. Okay, because you look at a trade, whatever, it's working during the corona. This trade has worked, okay, for a decade plus, and I got the evidence in here. Volatility event. This is Jan to Feb 2018. What you're actually looking at here between January, okay, and February in 2018, volatility was at 12%. This is the single largest volatility percentage move ever recorded in history. This is in 2018 when the market was ramping up and all of a sudden just went, ah! Some people remember it. They called it the VIX explosion. Okay, wanted to see what I did in the VIX explosion? Again, now I'm showing you actual trades because we started calling it the infinity spread. This is the part of the infinity spread. It was put on January 17th, not taken off until almost a month later. It's about 3 weeks later, February 9th. I put this on for a $1.37 debit. I closed it for a $10.58 credit. Okay, and that is a true infinity spread. Okay, that is that risk graph that I showed you earlier that kind of looked like this. This is the downside of it. This is the downside of that risk graph, and that's what I wanted to show you. So that's a volatility event. Wait, we're getting more recent. This is the Fed fueled selling in late 2018. This is actually what they called the nightmare on Christmas. That was that really fast move to the downside. Volatility was just spectacular. Here's another one that I hit. Okay, this is actually one that was actually opened in September, closed in October. $1.20 debit, closed it for a $6.59 credit. I mean, these percentage returns are phenomenal. But what you're seeing, stop right there for a second. What you're seeing right now, what have I done? I've only hit what? Maybe 1, 2, maybe 3 of these in an entire year. That's all you ever have to hit. That's one of the things, okay? And I like what somebody just said. He said, so it doesn't matter exactly what direction we move. It doesn't matter what direction we move. You just have to move big, okay? It does not, okay, have to, you don't have to have the trade, perfectly positioned. You just have to have it on. And I'll tell you, there are people that go out there and they say, you should always sell premium. You should always sell premium. I'm telling you right now, I'm actually buying it. But I'm going to have huge P&L. This is not all of your trading. You could do all kinds of other ancillary things, but you better always have one of these on because when the rainy day shows up, you want to be involved in the rainy day. Now, over my career, I showed you trades there from 2015 to 2018. I'm going to show you the present here momentarily. Before I do so, when I worked at Thinkorswim, okay, when you work at a brokerage firm, you cannot display your account statements. So anytime before 2015, of course, I was working at TD Ameritrade and Thinkorswim. Nevertheless, this is actually my financial crisis trade. My financial crisis trade netted me millions. And it's not a popular topic to discuss over here, but I can't show you the actual trades because I worked inside of the brokerage house, but I can show you the proceeds of it. That is my home in Scottsdale, and I only paid, though, $1.3 million for it. But today, it's worth a whopping $2.8 million, one of the better trades I've ever had. I actually used, okay, a VIX type infinity spread to produce what became ultimately phenomenal returns. And this was in 2008. In 2010, I took the capital and turned around and actually finally bought a property. And by the way, if you want to see what a 2.8, it's to me it's still a 1.3 million dollar house. By the way, 1.3 million dollars now in Scottsdale is like it's par for the course because everybody from LA is moving over there. 2.8 million though sounds pretty good to me. But what does a $3 million house look like if you're kind of curious? So I'm not in this house right now. I'm now in the mountains in a second home, but that's what a $3 million house looks like. If it every house has to have a movie theater, okay? And I'm kind of into like James Dean a little bit, and every house has to have an indoor basketball court. So I have 3 little kids, so it's been fun, and we still live there, own it. We haven't been there in about 6 months. We go back and forth. I'm about an hour and 20 minutes away. So infinity spreads. This is what we're going to show you. The opportunities are now. And the reason I want to show you this now, this is that same trade, okay? This is the same trade. But right now, we're completely different. Why are we so different right now? We've been hitting infinity spreads non-stop since February. It's been a total free-for-all. We put them on, take them off, put them on, take them off, put them on, take it off. Never had this outlier after outlier. People are, it's going to dry up. Who cares if it dries up? Okay, you got to go after it while it's hot. Who cares if it dries up? I just showed you 2015. You only had to hit once. Okay, 2016 was ridiculous. We hit the Brexit. We hit the taper tantrum. It just was going on in 2016. 2017 was a bad year. 2018, gold. Okay, 2019, 2020. I mean, it's just huge, and I'm going to show you those trades right now. But you want to see exactly what's possible? Here, this is, and again, when people say like, I want to see exactly what you're doing. First, I'm going to show you P&L. This is coming into February. Now, what you're looking at is a 5-day net liquidating value at 4 different periods of time. This account is an IRA. This is a retirement account. Everybody asked me that already. I saw the question come in there. This is a retirement account. It is an IRA. It's $211,000 to $248,000. Okay. This is a 5-day, and it looks kind of backwards, but when I say it's a 5-day net liquidating value, I could not think of a better way to display P&L to you. Okay, so I took the account at 4 different snapshots in time. Here again, all right, it's February 23rd to February 27th. It's a 5-day window, and the account literally jumps from 211,000 to 248. Now, time out. You're immediately going to ask me, how in the hell did you do that? How'd you make 40 grand in a week? I'm going to show you in about 2 seconds because I'm going to show you the actual trade. Then, okay, there's a lapse in time here for about a month. Okay, here's another week. And that week I only made about 3 grand, but the account jumped from 248, okay, to basically 305. How'd that happen? I'm going to show you. Okay, then I actually jumped forward. There's only so many spots I had in here. So then I jumped forward to July. Okay, by July I have the account to about $392,000. And as of, and I took that screenshot yesterday, I'm up to $621,683. Okay, and just to show you, and the reason I took the screenshot yesterday, volatility over the last week, it's been good. By the way, this is a Friday. I think this is a Saturday, a Sunday. No, I apologize. That's a Thursday, a Friday, a Saturday, a Sunday, and that's Monday. That says today, but obviously that screenshot was yesterday. So I wanted to show you. Little volatility last week. Gold, Jerry, gold. And the reason I like to show you this because, listen, most people don't show the details and every nuance of their account. Snapshots, tidbits in time, up until literally yesterday. Now, here are some of the trades. So this is all the way back in 2019. 2019, started making some money in the bonds, and it was in part of an infinity spread. I was like, oh, cool. That actually, it surprised me because I've never done this before in a bond product. Okay. By the way, what our clientele, this is the second time I've been to Don's service. Took a while to sink in out spread, saving my beep. Okay. Now doing them everywhere they fit using a risk twist. By the way, this is also referenced as a risk twist spread. It's embarrassing to think of the tens of thousands of dollars I spent on option info, okay, and classes. Don's class is the greatest, okay? And I also wanted to bring this one up. It's from Vicky W. Said I closed the TLT risk twist spread. It's an RTS for 127% gain. Price was moving around so much I ended up having to use a market order, okay? It's interesting to see how this works. Again, that's an old trade though. Let's get more recent. This is also 2019. This is a Spider Infinity Back Spread. Now, what's interesting about this is before Corona, and I wanted to show you. The trade started actually paying out a little bit before Corona. Then, okay, we're coming into more recent times. Now we're actually in 2020. Now this is a VIX volatility spread. This is the downside of it. This one I put on for 0 credit, closed it for a $3.75 credit. As I told you, okay, we really started to hit the stride in early 2020. Nobody really kind of knew what the coronavirus and so forth, until like late February, which I'm going to show you here in a minute. Before I show you that, this is one that I just threw in here. By the way, I threw this one in here because it's fun. This is back in 2019. I don't trade Tesla all that much, but this is a Tesla infinity spread. I put it on for a 20-cent debit and closed it for $11 credit. And then, of course, right after I did this, I'm like, I'm going to buy a Tesla. So I did. By the way, your Tesla doesn't come with him, okay? He belongs to me. That's a Zachy in a Tesla. But as I said earlier, if you ever have the means to buy one of these, I strongly urge you do so immediately. Ludicrous speed, it's nice. I like this. Put your trading account in ludicrous mode. Now we're actually going to get really recent. All right. This is the full onset of the corona, okay, where we're actually starting to slide in the marketplace. I actually opened a trade in January. Didn't know what corona was, for $1.80. Closed it for a $10.53 credit. It's every $180 I invested, I got back $1,053. Now, I said 180, okay? I didn't have to do this for 180. I could have done this $1,000, okay, $800 and gotten back $10,530. I'm bringing this into as if I did it like one time, but obviously you could expand this. You could even do 18,000 to return, 100,000. That's a big trade though. That's a really big trade, and I wouldn't suggest that because I don't think you need that. So why I wanted to show you 2020. You ready? 2020. The next trade? Yeah, you guessed it. This one is actually put on. The fun thing, it's actually put on in January, closed in February 2020. 36-cent debit, $1.35 credit. This one for $36, you can return 135, 275% return. Again, you could have done 3,600 to return 13,000. But this is where, get ready for it, became a complete and utter free-for-all after this. Okay, now we're into XHB. XHB, if you're unfamiliar with it, it's the home builders. Okay, so actually XHB is the home builders. Put on actually in late February, closed on February 28th. Clearly, I didn't think the coronavirus thing was going to take off. I just didn't. I closed the trade early. Okay, didn't matter. It was a 583% return. Every $53 I invested, I got back 362. Again, I want you to remember something in here. You could have done this $530 worth to return $3,620. You don't have to hit a whole lot of those to make a dent in the marketplace. Okay, this is an XLU risk twist spread. Okay, hands down, I'm gonna throw this out to you. This is probably the single largest return. It's an outlier that I think I've ever had. The XLU is the utility sector. Okay, this isn't part of this is the infinity spread. It's the risk twist side of the infinity spread. I put it on here. I didn't know what a coronavirus was, I don't think, in February. Closed it here, March 12th. Every $96 I invested, I got back $1,272. 1,225% return. Moving on. As I said, total free-for-all at this point. Okay, I already showed you a bunch of trades in the IWM. Now we're moving into more recent times here. This is actually in May. May 8th to June 5th, 18-cent credit, closed it for $1 credit. Again, when you look at this, you're like, that's not that much money. Are you kidding? EEM, it's only a $37 product when I was trading it. It's a $37 product. Those kind of returns are phenomenal on there. That one, okay, is almost as good as the XLU trade. It's huge. It's absolutely huge on a $37 product. Here I go in the XLF. You're like, whatever, man. It's the financials. It's a $23 product. I didn't pay anything to get in, and I got 51 cents out of it. Okay? Then I went out, and again, when I say that this thing just started to hit, I did it again in the XLF. In the XLF, then I put the trade on for a 25-cent credit and closed it for an additional 26-cent credit. You know, like, oh, whatever. It's 50 cents. 50 cents on a $23 product was absolutely phenomenal. And here's what our members are saying. 570% gain. XLF back ratio was a nice winner. Don, okay, new here. XLF and Baidu back ratio is batting 1,000. Close my XLF. Thanks, Don. I got out of XLF at 204. Here, okay, we're actually getting even more recent. Okay, now this one, this is in the XLE. This is the energy sector, right? Another June trade for like 3 days. 5-cent debit, closed it for $1.35 credit. I told you, it became a free-for-all. And then I went back to my, I went back to my friend, the bonds. Okay, so I went from the XLE, then I went into the bonds again. The bonds, June 5th, June 11th, 25-cent credit for a $2.10 credit. As I said, I got a lot of trades. I want to show you history here. Roku back spread. You know what I love about the Roku back spread? This is one of my favorite trades to talk about because this trade's a loser. This trade's a loser. I put it on for a $2 credit, and then I had to buy it back, okay, as a loser for a 38-cent debit. But wait a second. I put it on for a $2 credit, then I only paid 38 cents to get it back. How much of a loser is that? It's not a loser. Okay, I still made, here, put a commissions, everything, still made basically a $1.60 positive on the trade, right? If you put something on for a credit and then close it for like a 40-cent debit after commissions and everything, I still made $1.60 on the trade. Look at the Roku spread. It's bearish. It has puts. This one is bearish. I want to show you Roku at that time. Roku, okay, did nothing but go straight up. I put the trade on and the stock went straight up. I lost on that trade because I wanted to show you what, okay, I'm a loser. I wanted to show you what a losing trade looked like. Why not? Look, I put this thing on. I put that thing on 619. Where's 619? Okay, look, 619 is right here, right here. Stock did nothing but go up. I needed it to go down. Didn't. Doesn't matter. Put it on for a $2 credit. Next on the docket, right? And again, it's a party at this point. Here we are in Microsoft, June 3rd to June 3rd to June 23rd. 76-cent credit for a $5.40 credit. I mean, it just went haywire at this point in time. I sold Microsoft back ratio for 550. Omar filled at 578. And again, look at this. I only filled for 540. This guy smoked me at 587. Jerg over here put on 4, wiggled out of 2 at $300 range. Okay, and then there's this one, work like a charm. I did one in silver. You could do them in silver and gold. Okay, this is July into August. 23-cent credit. This one's a losing trade. Again, I like to show losing trades in here as well. It's a losing trade, but the losing trade still brought in, okay, a 20-cent credit. You're like, how's that possible? Because silver moved the opposing direction. I put on puts. Silver moved straight up. It didn't make a difference, okay? If you put something on for a 23-cent credit and were able to buy it back for 3 cents, okay, net, you still made 20 cents after transaction costs and everything, okay? That's the best loser you're ever going to have. Now, again, we're starting to get more recent, and I have a ton of these on right now, but to get a little bit more recent, this is actually the QQQ back spread. So this is a QQQ back spread, and this one was actually put on July 20th and closed August 21st. Okay, huge. 52-cent credit, close it for a $6.29 credit. Okay, that's a little history because I wanted to show you this, and I'll tell you why I wanted to show you it. In 2015, I hit 1. In 2016, okay, I hit like 3 of these. 2017, I didn't hit any. 2018, I hit like 3 of these, right? Because 2018 was volatile. 2019, I hit a couple of nice ones. 2020, forget about it. It got crazy. There's so many of the infinity spreads that I've hit, okay? I've gone absolutely nuts. By the way, here's the greatest infinity spread trade. I really did take capital and invested in this. I took my basketball court and I couldn't go to the gym anymore, so I apologize when I took this picture. They're prepping for paint in here, but that's what I did. I went out and actually bought an entire gym. When I say bought a gym, I actually bought an entire gym that closed down in the neighborhood, and I put it in the basketball court. That's what a crazy trader does after a couple of infinity spreads. Listen, what our members are saying. This is June 24th. Thanks, Don. I'm out for 752. Diamond. Don, you're amazing. Lee Ali. Made $1,458 today with techniques I learned at TheoTrade. Thanks, Don and company. Pablo. Thanks. Nice profits. Have a great weekend, everybody. What our members are saying. Daniel Fabian. I wanted to throw this one out here because it's also in midsummer. Kind of a slower, summer trade. But hey, guys, new member. Been lurking in the chat for about a month. Was short SPY. TheoTrade is the only membership I've ever had that pays for itself and then some. Brent here in August. You won't find a more supportive and profitable room anywhere in the retail trading business. And then Ali here. Don helped me pay for a year of TheoTrade subscription with the QQQ. And by the way, that was that exact QQQ trade that I was showing you. The trades that I'm actually doing here, okay, this stuff is hands off. And again, I wanted to show you trade after trade after trade after trade. Understand the concept, see the trades, okay? Every single trade that I showed today was displayed live at TheoTrade, okay? The trade results were showing the perfect for part-timers, and the infinity spread is very hands-off. It uses what we term set and forget order types. So a lot of what we're going to do with the infinity spreads is called good till canceled, GTC orders. You don't have to sit there in front of the computer, because I don't want you to think that this one is not going to be glued to the computer screen. We do trade all day, every day here at TheoTrade, but the infinity spread is hands-off. Okay, and I wanted to throw that out because I show you trade after trade after trade, but a lot of the work that we did on these trades, okay, like listen, this thing is put on, and then I just monitored it. How did I know to get out at that level? Because I have specific guidelines, specific criteria to know when to get in, when to get out, the exact point, and that's why I say it's set and forget. Some of the characteristics of the infinity spreads. Listen, the infinity spreads increase in value when exposed to heavy vol. So when volatility goes up, you make money on them. The increase in value when the markets sell off or rally huge, but they do have to move huge. There's significant profit potential to downside. There's significant profit potential for upside. We lose minimal capital. You can take losses on this trade. I don't think you can't, okay? But you got to understand what the infinity spread is about. And allow me for a second. You go out and let's say you do this trade. Let's say you lose $1, okay? And then you do it again. And that dollar, that thing is good for 3 months. And then you go out and you lose $1. And that one's good for 3 months. And then you lose $1. And that one's good for 3 months. And then you lose $1. And that one's good for 3 months. And then on the 5th time that you do this, you make $12. Are you ahead of the game? Like, that's what you got to realize about this. All I'm doing is swing and a miss, swing and a miss, swing and a miss, swing and a miss. Okay? Grand slam home run. And that's one of the things that I can't stress enough, that when you're looking at these infinity spreads, you have to look at them the right way. They don't always hit. But in 2020, okay, this is what you got to do. It's an excellent tool if you're looking for large returns on big market events. But it's also, like, you got to remember, this is also a great tool to reduce risk of a stock portfolio. Remember, I started off tonight and I said, what happens if you have a 401k? Okay, and that 401k, it's your life savings in there. You have $250,000. You realize I worked at a brokerage firm for 15 years. You know how many times I've seen people take $250,000, take it back down to like 50 grand? It's sick. How many times I've seen that? Use a hedge, reduce your risk, use something like an infinity spread. Okay, we teach you how to do that. And all of this is for nothing unless you can actually build the trade. But the one thing, like, do not let options intimidate you. Because a lot of people get to the point they go, it looks a little complicated. Okay, you gave me what? An hour and a half tonight, and we took you this far. Okay, give us a few more hours, we could take you the full distance. You got to realize, though, that when you trade options, they're like a chainsaw in the marketplace. And if you're going to cut down a massive tree, you're going to use a chainsaw. Because if you used a handsaw, it'd probably take you your entire life to cut down that massive tree. But the chainsaw, even though the chainsaw is going to be the quicker, okay, and the cleaner way to do it, if you do not know how to use a chainsaw, okay, you could seriously damage yourself, others, and, beyond that. Options are the same thing. Options could be the quickest, the fastest, the safest, the easiest way to get where you want to go in the marketplace. But if you do not know how to use them correctly, you're going to cut off a couple of fingers. So the strategy below, again, it's being done for a 31-cent credit. It is a credit, but there is risk in the strategy. I don't want you to think there isn't risk. There is risk, but the risk is negligible. Infinity spread is about going out and just putting it on and doing it sequentially. Okay, they hit. But this is what you need to know to successfully create infinite possible returns with minimal risk. This is what you need to know to actually create infinity spreads. First, okay, when and where do you place these types of spreads? So when I say when and where, like, okay, what products do I use? Should I use the spiders or the Qs or IWM, or you saw the TLT and I did something in Roku, but I had even a trade in Tesla. And where do I actually place these infinity spreads? Okay, how often should I place these infinity positions, and do they have to be continually monitored? Well, I'll tell you that right now. They don't have to be continually monitored because you can use set and forget order types, right? How do I set up the trades? And what's the correct market volatility? This is one of the key factions of this trade, market volatility. It doesn't pay to do an infinity spread in high vol. You can't do it. Why? Because the market's already pricing in the big move. You can't put on a trade for a big move when the market's already pricing the big move. So you have to put these trades on sequentially. And when the market starts to move huge, what do? You make money. Now that's the thing. People go, what happens if the market's moving huge? Well, you wait, it'll calm down, and then you do the trade. And that's the thing. Like, we'll teach you when the right market volatility is. And you can always put these trades on. But there are times that are just phenomenal out there, right? Now, do I need a large amount of capital in my account to do this? Okay. I showed you trades that I did, and this is specifically why I do these trades. I did some of them in the XLF. I did some of these in EEM. Why? Oh, I'm messing that up. EEM. Why did I show you those two trades? Because I wanted you to know one of the XLF trades was like a $36 credit. That thing, you could have easily $2,000 account. The EEM trade, $2,000 account. When you start stepping up into big products like the Spiders and the Apples and the Googles, it's going to take more capital. But don't tell me that you can't do this trade with a $2,000 account, because I don't want to hear it. Because you know what? I spent 15 years in the brokerage business. I know everything there is to know about margin, portfolio margin. Every trade I'm showing you today can also be done inside of an IRA. Listen, the buck stops here. Like, I've seen what people do in this business. There's only a handful of us that have ever had the experience in the trading world, the brokerage world, and now the education world. And there's only a handful of people out there, okay, that have that knowledge. And I'm telling you, when it comes down to the account to do this, do it in the retirement account. Okay, do it with a $2,000 account. You're fine. What underlyings do you do this in? Again, do the TLT and the Spiders. I'll tell you right now, if you're thinking about Tesla, because Tesla always moves big, everybody always thinks like the profit and loss graph looks like this. I should always do it in Tesla. I'll tell you right now, this will not work in Tesla. It'll no longer even work in Roku. Okay, it's not going to work because there's too much volatility in those products. You have to know the right amount of volatility. Okay, how do I know when to get in and when to get out? Well, how do you know? Percentages, volatility and percentages. We teach you that. What are the percentage returns supposed to be? How do I know, again, what those percentage returns are? Can I do this in an IRA or retirement account? Of course you can, and I just detailed this. How do I size the trades for my account size? One thing I'm really critical about, you don't put your whole account into an infinity spread. You put a minute amount. Even if you have a $2,000 account, okay, what do you risk? You could put $200 into an infinity spread. Why? If it doesn't work, you're not going to lose the full 200. Okay, if it doesn't work, you're going to lose a small amount of this, but if it does work, your $2,000 account can skyrocket because you saw trades that I did for $100 that turned into over $1,200. You can really take it to the next level. But you have to be a little patient with it. Listen, what is the right amount of risk for me? We're actually going to help you detail and narrow down the right amount of risk for you. How do I actually go about physically building it? Like, what do I click on to build it? We can teach you all of that. Listen, let me show you exactly what we do here at TheoTrade, because that's what this is about. TheoTrade creates recipes in trading. Okay? You're going to bake a cake, use a recipe. You're going to trade, you have to have some type of recipe. And there's terminology they always use for this. I say we create recipes in trading. Really what it is, it's criteria. It's actually taking a bulk of stocks and actually running them through a subset of criteria, an actual checklist. What does the checklist look about? And what does it look like? Trading's all about answering the what ifs. What might be a good infinity spread candidate? What's the correct options expiration cycle? You don't even talk about that. What do options even look like right now? You could do one for October, you could do one for November, you could do one for December, you could do one for January. Like, which one? There's even weekly options. How much capital do I commit? When do I execute the trade? What strike options do I buy? Which ones do I sell? What do I do with a winning trade, a losing trade? Listen, we have those answers. What we do here is we actually build, a recipe with definitive criteria, checklists. And when I say the word checklist, the idea comes from if you hopped into the cockpit of a 737. Nobody hops into the cockpit of a 737, hits the throttle and goes and takes off. These pilots go into a 737 and they sit there for 20 minutes. It doesn't even matter if you're late on a plane. They sit there for 20 minutes and they go, well, we got to go through the checklist. Pilot literally comes out of the cockpit, goes to the outside of the plane. He's like pulling on the wing. Is this thing going to fly? You have to go through a checklist. You have to go through unique variables. You want to succeed in this business, you got to have something definitive to work for. You have to have definitive criteria. When I say checklist, we go through step 1, step 2, step 3, step 4, step 5. You know, actually, by the way, on this trade, okay, there are 10 steps to actually get in. And then there's an entire course of criteria. What do I do? What do I do once I'm in the trade? What if we go up? What if we go down? What if we stay flat? How do I fix a losing trade? Like, again, what if? That's what we do here at TheoTrade. Strategy, that part's easy, okay? The criteria is what's so hard. And when I talk about criteria, again, it's the answer to your questions. We'll give you the right probability for the trade. How many option contracts do I trade for the account size? Yeah, how about we actually have a whole guideline? We tell you definitively, how many contracts do you trade? We'll tell you when to close the infinity spread. What do I do if we sell off big? What's the correct return for the strategy? If we rally massively, can you fix a losing trade? It's all about how, when, why, at what price. And I'm telling you right now, that's just the beginning, just literally the beginning of the variables you're going to face while trading infinity spreads. Now, you can read what a spread is. You can go out there and probably read and Google what a back ratio spread is. Some people have probably already done that while I'm speaking. Stop, pay attention. You can always Google. There's going to be 10,000 pages that'll tell you what a ratio spread is. Literally, there'll be 10,000 pages, okay? Not one of those pages, though, is going to have TheoTrade's recipe for success, okay? Not one of those pages is going to say, this is how you definitively put on an infinity spread, strike by strike, step by step. We built this criteria from 20 plus years of trading experience. I had access to client order flow for 15 years. I've viewed and studied literally millions of accounts, and it's not just me. Okay, TheoTrade is not just Don Kaufman. I'm not a one-trick pony over here. Okay, we have 7 other full-time instructors. One of our instructors is a professor of finance at Loyola and moonlights with TheoTrade. He also worked with me at TD Ameritrade. We have another instructor here who actually writes exam questions, okay, for the CMT test. We have 3 CMTs on staff. These guys know what they're doing. And we viewed and studied millions of trading accounts. We ran education. I ran education for over 15 years at a firm with the largest options order flow in the industry, which was Thinkorswim or TD Ameritrade. Okay? All of that in summation is what? Okay? It's criteria. And criteria becomes your recipe for success. The following strategy, the infinity spread, and the corresponding criteria requires the utmost attention to detail, and we spent years fine-tuning this trade setup and this criteria. And when you approach the section on criteria, you follow the steps to build a trade. Okay? We built, okay, a 2-portion course curriculum, right, for infinity spreads. And what this 2-portion course does, and when I say a 2-portion course, okay, the class itself has a volatility crash course, which actually teaches you a portion of it, and then it has the volatility back spreads. This portion of the class, this is about the VIX. This portion of the class, this, okay, is about the back spread. This is the bearish side, this is the bullish side. And I actually broke it into 2 classes. And I'm telling you right now, it's $497. Stay with me right now. I'm going to tell you why to stay with me. We're actually going to give you a little bit of a bonus, a little bit of a deal. I'll come to that here momentarily because everybody fixates. It's $497. You've gone out and bought this class and you bought that class. Just stop for a second. Okay? No matter what you might think, I'll make it worthwhile to you. Listen, the course, okay, the top course over here, the volatility crash course, is 2.5 hours. Okay? The secondary course is another 3 hours. And you say, why do you break them up into 2 different pieces? Because technically they're 2 different trades. And technically to go through the criteria, I really wanted to break it down. Is it pre-recorded? It is pre-recorded so that we can edit it for content to make everything and every nuance in there absolutely spot on. The slide deck for these courses, okay, they include entry and exit criteria. They're available immediately tonight for the download. By the way, these courses, you can watch them this evening. You'll sign up. And I'll tell you right now, you're not going to pay the $497. Okay, because we do have a bit of a bonus for you tonight. But as I was saying, the courses, they're archived 24/7, but you even have access to, we have an iOS and Android application. TheoTrade, we're not just a website. We have applications for iOS and Android. You can run it on an iPad. You can run it on an Android tablet. Whatever does it for you. You can even download these courses and watch them while you're offline. And again, it's phenomenal. Now, before I go any further, and I'm going to show you the curriculum for the classes in a second. Before I go any further, as I said, we have some bonuses for you tonight, okay? And we're going to provide, okay, a drastic discount on the $497. The reason I'm detailing this right up front, because, listen, I know that people come out tonight. We have literally almost 1,000 people in attendance. I know people come out tonight, and when they do so, a ton of you, okay, have already you've been to so many different webinars and so many different things, and everybody charges what? They charge $497 for a class. Am I right? Okay, how many people here have ever been to another webinar or another class? Seriously, just a yes or a no. Okay, you've been to another webinar, another class? Come on, my feelings won't be hurt. All right. The reason I'm saying this, and of course everybody has, I started going on the road and teaching for Thinkorswim all the way back in 2001. And from 2001 to 2015, okay, in that period of time, I've seen everything that's out there in the entire education, the entire industry. And you're like, well, of course. I was in the industry, right? And I was out there doing classes for TD Ameritrade and Thinkorswim. I looked at all the other education classes, and there was always something that bothered me, okay? And I'll tell you exactly what bothered me. They go out there, and they charge $497 for a class. Then they charge you $497 for an indicator. Then they charge you $497 for a class to learn how to use the indicator to work with this class. Before you know it, you have to pay $3,000 for coaching because you want to be able to talk to somebody about this. And I'm going to make this clear, and then I'm actually going to be as concise as I possibly can. Okay? Before I go any further, how about I just do this? We'll give you all the email support. Every trade, we'll text these trades out to you, okay? And we're going to do that for quite a significant period of time because it is our belief here at TheoTrade, no one, okay? No one can take a what? Here's a 5.5 hours of coursework, and what, we give you a little pat on the tushy and send you out into the marketplace. Got to be out of your mind, okay? We're going to give you everything. When I say everything that you need in this business to survive, from indicators to coursework to support. How about after you take these classes, okay, you can email me personally. I'll return your email. We have 6,000 clientele here at TheoTrade. I have no problem responding to emails. All right. We also have 7 other instructors. Everybody's available in email support. You can actually email us specific trades, and we'll say, hey, that trade sucks. You shouldn't do that. I don't mind saying that. And I'm telling you, okay, it's going to be for less than $497. When I say we're going to give you access to everything, this is not, a one-trick pony. This ain't one class, okay? Everything you're going to need in this business. And when I say everything, I'm going to show you just that. Everything you're going to need in this business is available at one price, okay? It's not an introductory price. We don't do memberships anymore. Forget all that crap. It's one price, okay, and it's one time. Before I show you that, okay, because I'm going to show you these bonuses in a second. Before I show you that, here's the curriculum for the Infinity Spread class, and I'm telling you, okay, you want to take this class. Infinity Spreads workshop curriculum. You're going to learn how to construct the infinity spreads, maximum returns, minimal risk, how to build your own infinity spread. That's one of the important things, like the detailed criteria, okay? How to build infinity spreads, whether you're bullish, whether you're bearish, whether you're neutral. How to hedge your portfolio, okay? Listen, you're going to get what you're going to get out of this. But if you want to learn how to hedge your portfolio, you think that isn't worth, okay, a few $100 to learn how to hedge what could be tens of thousands of risk, right? When to open, when's the best time to close infinity spreads, the tools and strategy, okay, for analyzing market conditions. This is actually going to be talking about expected move, how to create trades based on movement in the market volatility, not purely direction, okay? How you can generate big returns in a small account, retirement account with minimal risk and options experience, okay? And by the way, if you're worried about, I don't have any options experience, don't be worried, okay? How about we have an entire curriculum that we're going to make sure, okay, that you have to get you ramped up. We have an entire curriculum for people I have never traded an option before in my life. Excellent. We got you covered. Okay. What strikes, what expiration period to give you the highest probability of success. Why infinity spreads are the perfect tool for part-timers. Trading doesn't have to be, meaning that you're glued to the screen all day. Now, I want to show you another one over here. This is actually from a gentleman by the name of Ken. I blanked out his last name. This one actually came in August 3rd. It said, "Woohoo! Thank you, Don. I am never sure of trades that are new to me that I structure myself. This is great to hear." What this gentleman Ken was bouncing off me as a new trade. Okay, not to brag, but due to you and your magnificent team, I am up 1.67 million in profit. Okay, yes, I'm going to pull a big chunk of this out of my and my wife's account. And I give my granddaughter $50,000 to work on her master's degree thanks to all of you. I'll let you know how the trade goes. I need to check the chart in the Japanese ETF. Okay, and that's just a thanks from Ken's family, right? In addition to the course, okay, in addition to this curriculum, we also do a weekly video. Okay, I'm giving you access to this, a weekly video that updates you continuously on infinity spreads that we have on. So we not only will text you also when these trades come on, but then we actually update you. And this is where I say, everybody's like, okay, let's talk about the bonuses. So as I was saying a moment ago, we go beyond one class, one indicator. Like we understand that, again, I watched the education industry for 15 years. People want everything. You want everything to be able to trade. You want everything to be able to invest. You want it at one place and one price. And that's when we stepped out of TD Ameritrade to build an education company. We stepped out to change the model of education. Okay. The first bonus number one, access to over 96 trading classes. When I say 96 trading classes, we're actually going to give you the entire arsenal of trading classes tonight. Okay. Here's maximum returns with infinity spread. Okay. That class alone is worth $497. But how about we just give you all 96 classes that we've done? Guide to Surviving and Thriving in Extreme Volatility, Volatility Back Spreads class, Guide to Small Account Growth, okay, Black Book Spreads class. By the way, the In-Out Spreads class, the In-Out Spreads probably the most prolific class that we've ever done here at TheoTrade. And this is where I say, you want to go out and take a class for $497, you go to town. We'll just give you every single class tonight. It's included. Why do we do that? First of all, okay, no one else in this industry at any price can even come close to this. They can't even come close to it. When I say at any price, I don't care. You go out and pay $30,000 for education. They're not going to touch what we have. It's 96 trading classes. You go, that's totally overwhelming. How am I ever going to watch that? It's not designed for you to watch, okay, all of it. There are different genres. There's different traders. This, as I said, isn't the Don Kaufman show. I'm going to introduce you to the instructors. We have the risk twist spread class, the high probability, selling high probability spreads, iron condors for income, selling premium and minimizing your risk. We have day trading, NASDAQ futures, covered calls. Mom and pop want to sell a covered call. Essential skills for consistency in trading. Top 10 skills for growing a small account. Pairs trading. You name a genre of trade, okay, we have it. I'll tell you right now. It's like over $9,000 in classes alone, right? It's huge. These classes, okay, well, here are some of the instructors. Now, I've already introduced you to myself, but let's introduce you to the rest of the crew. This is Jeff Bierman. Jeff actually worked with me at TD Ameritrade. If you've ever been on the Thinkorswim charts, Jeff is directly responsible for over half the studies in the Thinkorswim charts. Okay, Jeff is also a professor of finance at Loyola. Now, in fact, teaching the master's program there. You can pay $42,000 a year to see Jeff Bierman at Loyola. We use almost an identical curriculum, and I'm not joking about that, here at TheoTrade. Okay, that guy alone is worth, every dime that you're going to spend on TheoTrade. Next, we come to Matt Williamson. Okay, Matt Williamson, market neutral premium selling strategist. So if you're into selling option premium, okay, this is the gentleman for you. There was somebody here earlier in the chat room and he said, hey, I only sell options. I don't want to buy options. Good. That's why we have Matt for you. Okay? That's why we have Matt for you. And that's why I stress to you, okay, it's huge that we have somebody for everybody here. How about this? Corey Rosenblum. Okay? Corey Rosenblum. First of all, and I should have put this in here, Corey is also a CMT. Jeff Bierman is a CMT. Okay, CMT finance professor, CMT senior strategist and a resident swing trader. I've known Corey now for almost 20 years. Corey is, when I say your resident swing trader, shorter duration trades, in, out, on with your life. Next on the list, Brandon Chapman. Okay, Brandon, also a CMT. Now, Brandon Chapman also worked with us at TD Ameritrade. For those of you that don't remember this, Brandon. And I love to mention this because Brandon worked in the education group at TD Ameritrade. And Brandon's claim to fame, he wrote the course manual for a class at TD Ameritrade. Some of you will remember this. There was a class at TD Ameritrade that was 18 months in duration. And that class cost just over $24,000. Does anybody remember what I'm talking about? It's been about 6 years since they've had that class. Brandon Chapman actually wrote the course material for that entire 18-month class. People, hand over fist, they paid $24,000. I'll tell you right now, Brandon Chapman, not only is he on crew here at TheoTrade, okay, he'll tell you himself, what we do here at TheoTrade will absolutely smoke it. It'll just smoke what we were doing for $24,000 a couple of years ago. Then we come to Steve Slim Miller. Slim has actually been on our team now for a couple of years. He's got more than a couple of years in his business. Slim started trading before I was born. 43-year veteran, stock options and futures trader, and that's no joke. Slim is phenomenal, and I'll tell you, his one of his expertise that's not listed in here, it's mindset. If the market has got you in terms of your mind, it's the guy to listen to. There's nobody better in this. You need a coach. People are like, selling classes on mindset. We have it for you. Okay. Next, Tony Rago. Tony's our intraday strategist. Tony calls setups all day. NASDAQ futures. People, all Tony trades is NASDAQ futures. As I said, everybody on this team is unique. Everybody has a different genre of trade. Me, I'm your outlier guy. Okay. I'm huge in outlier. I'm an options and volatility geek. I make money off explosion and volatility. Jeff Bierman, technical analysis. Matt Williamson, premium selling. Corey Rosenblum, swing trader. Brandon Chapman, okay, technicals, fundamentals, okay, kind of fusion between technicals and fundamentals, but his macroeconomics, spot on. Steve Miller, I like to say mindset, but he's also cyclical analysis. Tony Rago's trader all day, every day. Last but not least, Blake Young, also hails from Thinkorswim and TD Ameritrade. People, we just brought on somebody, and Blake Young is brand new, does market profile. No one in this industry has anywhere near, in the education industry, okay? Most of us in this crew have held Series 3, Series 4, Series 7, Series 24. I've had my 66, my 24, my Series 10, you name it, okay? Most of our crew has actually been licensed broker-dealers. Most of us actually have run money in the past. Blake Young, former hedge fund manager. Jeff Bierman, formerly ran money. Okay? Matt Williamson, formerly ran money. None of us want to run money anymore. It's a pain in the ass to run somebody else's money, and I'm serious about that. And it goes on. Steve Miller also ran a huge fund for many, many years. Nobody wants to do that anymore. Okay? Hence, we like to come here and teach people what has worked specifically for us. By the way, that's just the first bonus. When I say 96 classes, we give you the full Monty from day one. Okay, next bonus. We're going to give you access to everything for the next 3 months. Okay? Now, when I say everything for the next 3 months, I literally mean everything for the next 3 months. Okay? All access, TheoTrade VIP membership pass for free. Okay? Unlimited access to TheoTrade. Okay? Live trading chat room, broadcasting 6 hours a day. By the way, we are now beyond 6 hours a day. We're now actually broadcasting the entire trading day. We've actually got, again, 8 instructors that are broadcasting out there. So it's completely full day. And everybody goes, I can't possibly watch that much. It's fine. You don't have to watch that much. Everybody tunes into the trader they like. Okay? The traders provide real trade ideas, real-time market insights. When I say real-time trade ideas, we're trading throughout the course of the day. There's days where, you know what? We have one guy that focuses a little bit more education. I do a lot of trading out there. We do push and text notification of trades ideas, including infinity spreads, meaning that we actually will text you out trades. Okay? We'll do push notification, text out trades. Okay? 5 distinct trading portfolios. You can follow our portfolios. Okay? Then we have a coaching session with timely sessions, including, stocks, options, and futures. Now, a coaching session. When I say coaching session, guess who actually teaches the coaching session? That is the continuing education. Okay? Who teaches the coaching session? You guys tell me. It is none other than Jeff Bierman. Okay? So Jeff Bierman is actually who's teaching that. That's our instructor. Give me a second here as I go through. So Jeff Bierman's actually the instructor for that, who's the professor of finance at Loyola. And probably to top this off, and I would say probably one of the biggest things over here, the instructors, okay, are directly answering your trading questions via email. All these instructors that I just mentioned, all the aforementioned instructors, okay, will answer your emails directly. Okay, you have a question, email Brandon. You have a question, email Don Kaufman. Question, email Matt Williamson. The engineers love this guy right here, Matt Williamson. He's a spreadsheet away, okay? This is all included. It's all included. It's another $1,000 in support trades and insight, okay? On top of it, we're also going to give you all of our proprietary indicators. So we build, okay, a ton of proprietary indicators. We build a ton of proprietary scans. We give them to you. Tonight, remember, I started off tonight saying, okay, auto expected move. We're actually going to give the auto expected move to you this evening, okay? We'll also actually provide to you, those that are enrolling, S&P gravity points, TheoTrade RSI Laguerre. Like again, when you start looking at this from a cost perspective, you're like, it's crazy. These guys do absolutely everything and they do it at one price. And that's exactly, we give you another access to $1,800 in indicators and scans. I'm not done yet, okay? We have a third kicker tonight. Here's the third kicker. You ready? We have a live class coming up. Options oddities. This is actually tracking unusual options activity. The instructor for that is Brandon Chapman. So Brandon's doing a class Tuesday, October 6th, 9 a.m. to 11 a.m. Central Time. The course is going to be archived immediately for download, okay? This is going to be a great class because this is kind of one of Brandon's specialties here. When I say option oddities, Tesla trades 7,000 contracts, okay? Out of the money calls. He'll actually teach you how to pick up on those odd option trades and more appropriately, how to actually use them. So you have an odd option trade, something that's going on, something that's just, wild and outlandish. He'll actually teach you how to pick up on that. That's what this particular course is going to be. And again, I put a huge amount of weight into this. This will be the 97th course here at TheoTrade on October 6th. Enrolling tonight, okay, you're in the class because, again, you've got access to 3 months, which I'm going to show you. By the way, at the option oddities, tracking unusual options activity, this is what you're going to learn. You're going to learn what unusual option activity is. You're going to discover why this activity is important as an indicator of institutional money flow and sector rotation. Number 3, what resources, okay, can be used to identify, okay, significant activity. So not only are we going to talk about what unusual option activity is, okay, we're actually going to show you what resources to find it. Number 4, how to learn, okay, to find it, and of course other important considerations of it, because it could actually be like dividend risk or something. Number 5 over here, you're going to learn how to use time and sales, and then of course most important, how to actually construct trades around that activity. So we're actually going to take you through pretty much A to Z here about option oddities. And as I said, what this really breaks down to, somebody does 30,000 contracts inside of Tesla. 30,000 option contracts in Tesla. We'll be able to examine what that trade is, what it actually means for you, and more appropriately, how you can actually use it to profit from. And that's what this class is actually going to divulge. Listen, TheoTrade, we include everything you're going to need to invest in trade. We do classes, we do coaching, we do email access to the instructors, we do a live trading room, okay, live trades, indicators and scans, mobile access, okay, 24/7. It's everything that you're going to need in this business to succeed. And what we really sought out to build is TheoTrade has kind of become the Netflix, if you will, for traders. Everybody has a genre, everybody has an area of Netflix they like. It's the same thing here at TheoTrade. Tonight, as I said, we have a discount. Tonight, it's $297 for 3 months. It includes maximum returns with infinity spreads class. There's 96 trading classes. There's new monthly classes. That's, of course, going to be Brandon Chapman's class, okay, October 6th. If you can't make it live, it's fine. It's going to be recorded. We have a live trading chat room, okay, broadcasting over 6 hours a day. Every detail is archived, by the way, and you can even play it back at like 2 times the speed. There's people, I can't watch 6 hours a day. Nobody asked you to watch 6 hours a day. Okay, time out for a second. In looking at this, we realize how overwhelming it is the first time you see this. I'll tell you what, for $297, I think you'd rather be overwhelmed than underwhelmed. Okay? In addition to that, we give you indicators. All the indicators and scans you're going to need. If we build a proprietary indicator, it costs us a couple $1,000s to build an indicator. We have 6,000 clientele. We do text and push notification of trade ideas, 5 distinct portfolios, daily coaching sessions. Instructors directly answer your trading questions via email. Let me ask you something. Is it worth $297 to be able to email us for one-for-one answers. And I'm telling you, when you say, I need to talk to Don, it's not going to be some monkey, you're talking to. It's going to be me. This monkey right here. Okay? It's $297 for 3 months. I'm also, before I take you to the page and get people kind of enrolled for this, the one thing I want to stress, okay? This $297 is a one-time charge. I can't write on the screen, okay? For some reason, I literally can't write on the screen. It's a one-time, okay, charge. This is not a membership. You pay $297 for 3 months. Somebody says, I want more. I want more. Another 3 months? Good. You pay $297 for 3 months. You go, I want more. Good. We'll ask you again. You want to do it again? It's $297 for 3 months. That's it. It's not introductory price. We don't do that crap with I don't like memberships. I don't like memberships. Okay? I'm still trying to get out. You guys saw, I bought a gym. I'm still trying to get out of my gym membership. I've been paying $99 a month. Okay? The gym was shut down and they're still trying to bill me. I'm like, what do I have to do? They're like, yeah, you pretty much have to come in here and give blood to get out of your membership. We don't do that crap here. It's $297 for 3 months. Okay? Go to TheoTrade.com/profit. You want to enroll for it? Go to TheoTrade.com/profit. One other little kicker here. We'll make this tonight a completely riskless trade. And I'll tell you why we do this. It's important that I actually explain this for a moment or two. TheoTrade's a completely riskless trade. It's everything that you're going to need to trade here, okay, from absolute novice to expert. We have everything you're going to need to trade. I'm going to show you the site in a minute. We give you a money-back guarantee. There's one thing I'm very adamant about, okay? It's $297, okay? That's not exactly going to break our bank. We have 6,000 people on TheoTrade right now, right? And the reason we do a money-back guarantee is because we want people that are satisfied. Trade with us. Over the next 3 months, if you're not completely satisfied, and by the way, we don't define what is satisfied. Just email us, support@theotrade.com. Provide us the details of your trades, receive a full refund. If you don't love us, receive a full refund. By the way, the stipulations, we had to throw stipulations in here, and I'm going to show you exactly why. Again, it's $297. All right? If you are not happy after 3 months, we will give you your $297 back. We want you to leave here happy, okay? But we require one aspect. You actually have to trade. You can't just go into our archives and listen to everything and not trade. All we ask that you do is that you do 10 trades in any of our strategies. Remember, we have 96 classes, any of the strategies. And you have to use our criteria in the next 3 months. You got to do at least 10 trades. We will text out more than 10 trades. You ain't happy? Get your $297 back. By the way, your initial account value has to be $2,000. That's not our rule. Okay, that is not our rule. That is part of a FINRA rule to be able to trade some of these strategies. $2,000 is what you're supposed to have in there to be able to do these trades. And you must follow the criteria. You must follow our criteria. If you're going to do infinity spreads, follow the criteria. If you're going to do something like in-out spreads, you can't make up your own criteria. The last stipulation. It has to be real money. You can't just paper trade. And the reason we do that, it's to keep people away that just I'm going to go and listen to everything and get my $297 back. No. You're going to listen to us for the next 3 months. You're going to trade with us for 3 months. And I'm telling you, you're going to be blown away that we do for $297. And I'm also going to tell you this before I go any further. $297. I don't care where it is in this industry and what it is in this industry. If you find something that you truly feel is better for any amount of money, bring it to us. I want to know about it. Because what we do here at TheoTrade and what our mission is literally to provide everything that anybody's ever going to need to succeed in this business. Okay? We just keep bringing on more instructors. Why? 6,000 clients. Okay? We have the capital to do so now. Now it's on. I mean, again, we compare ourselves a lot in the trading world. I love the model of Netflix. And I love what they've actually done. They went out there. Netflix originally started these crappy, B movies. Now it's the place to go. Why? Because they've actually got the capital to do so. They're buying $100 million plus movies left and right. We're doing over here is bringing on new instructors, bringing on new talent. Always, okay, pushing the envelope in terms of research. That's what we do. again, for 297 bucks, 3 months, and a full money back guarantee, you can't go wrong. Tonight, there are 30 and only 30 riskless spots on this deal. And the reason we do 30 spots is we have to go through, okay, and reconcile your trades. Okay, if 30 people sign up and are each doing 10 trades, it's an insane amount of time and number. Tonight, we will do 30 riskless spots. Okay, it's a matter of just trade size. We trade live. You have unlimited email mentoring. Send us your trades. The $297 riskless offer, it's never been available before with infinity spreads. Plus, you're getting the optionalities course. Brandon Chapman, again, live October 6th. Okay, tracking unusual options activity. You're going to love, by the way, you're going to love that class because I've actually worked specifically with Brandon on this particular class because I'm a little bit of an options geek and I love what he's put together. Again, get into TheoTrade now. Now, I'm actually going to show you a couple more things and then we're going to jump over to our site. So bear with me here momentarily. By the way, if you would, there's some people that are enrolling right now because they're asking for this address. So just hang with me here for just a second here as I bring this up. So great, my Firefox is not responding. What I'm actually trying to bring up for you specifically is right here. All right, perfect. Okay, this is TheoTrade. I'm actually going to show you a little bit about TheoTrade and take you a little bit into TheoTrade here momentarily. One of the first things, though, I want to do is walk everybody through this so that you guys understand. If you go to theotrade.com/profit. Again, it's theotrade.com/profit. Okay. We can answer questions for you right now, but the reason I want to take you to this particular site, okay, is several-fold. First of all, we're here right now. We can actually help you, or you can ask questions directly in the chat room. I'm going to answer all of the questions that come up here momentarily. The reason I'm taking you to this site, okay, again, there are 30 riskless trade spots left. That simply means when those are filled, it's fine. You can still enroll, but the first 30 people, okay, get a money back guarantee on the $297. The real reason I'm actually throwing this up and throwing this page up here, though, is specifically this. When you come to the page, okay, click Add to Cart. As you go to Add to Cart, okay, the Infinity Trader comes up, and I'm going to scroll down for just a second, all right? It is a single and one-time payment of $297. So I throw that out there, and I always show it so that everybody realizes this is not a membership. Okay, you can also even break it down to $149. You can do 2 payments of $149 if you so choose. But I wanted to show you that because it just always comes up. The other thing I want to show you, okay, as you are enrolling, right, you're like, this is kind of invasive. They're asking for my phone number. Why? It's for text messaging. Okay, if you have any type of smartphone and you need a text message, okay, please, okay, right here, put in your number so we can message you. Again, that's what a lot of people kind of miss in here, the phone number. So please include your phone number so that, of course, we can put billing information in there for you. But more appropriately, phone number so we can actually text you out. Again, it's theotrade.com/profit. As I was saying a moment ago, I wanted to show you, okay, TheoTrade. When I say I wanted to show you TheoTrade, this is what TheoTrade looks like. And we say, what do you mean? Okay, this is actually the site. So down below over here, this is actually the chat room. Thousands and thousands of people are chatting back and forth in here every single day. Our instructors are all highlighted. Okay. Over here, this is actually the broadcasting area inside of TheoTrade, but we're actually going to broadcast live. Now, to continue on from there, you're an absolute novice, a total newbie. You have no idea where to start. Come into TheoTrade, and go right here to what says Start Here. This is a Start Here menu. Now, some people come in here and they're like, this looks a little basic for me. Options 101, options 201, options 301. But I'll tell you what, for 297 bucks, for those of you that have extreme experience, listen to me for a second. Order execution part 1, part 2, and part 3. I don't care how experienced you are in this business, okay? This 3-part session will save people thousands of dollars a year. I've worked in the brokerage side for 15 years, okay? My specialty is going to be order execution. I mean, every nuance of technology in terms of how you actually send an order, what this class actually teaches you in this 3-part session, okay? And it's just under 3 hours. What it teaches you is how to get better fills on stock, on options, and on futures. And I'm telling you, it's how to work your orders. I don't care how experienced you are. Everybody should tune into that session. Literally, order execution part 1, 2, and 3. I really, really suggest it. Then I actually take you over to what our archive looks like. Okay, when I say our archive, this is the classes. This is the 96 classes, right? We break everything down by category, genre. You want a day trade? Good. Technical analysis? Awesome. Option newbies, option strategies, stock classes, futures and bonds, hedging, trend trading. Okay, mindset. I told you Slim Miller is huge. Pairs trading classes, you name it, it's all here. Let me show you. Okay, my area in here. I'm one of the resident option geeks in here, and as a resident option geek, this is what we look like. When I say what we look like, these are some of the classes. I've done a recent class on gamma irons, controlling your risk, volatility crash course, back spreads, guide to surviving and thriving, extreme volatility, black book spreads, straddles class, maximum returns with infinities. Yeah, that's the class they're going to be watching here. Okay, guide to maximum edge trading earnings. Okay, I'm telling you, you name a class. When it comes to option strategies, I think everything's covered in here. Butterfly's guide to weekly returns. All right. So we're totally out of control in terms of the number of classes we have. And you go through it and you're like, how am I going to find anything? Okay. We actually built a search engine inside of here. We actually built a full-blown search engine. Watch. In, out. I type in, out. In, out is a type of spread. Coaching sessions. Okay. In, out spreads, in, out spreads, in, out spreads. We built our own little version of Google right into here. Okay. Again, if you have questions, I'm going to answer them right now. Okay. But come in here again. Go to TheoTrade.com/profit. Okay. Enroll now. Again, I'm going to read off the names, and that's important. I'm going to read off the names of the first 30 people that enroll, okay, to assure you that you have your riskless trade spot. And again, it's the first 30 people that enroll for it. You're good to go with the 30 riskless spots. All right, let me answer a couple of questions in here, some general questions. By the way, I wanted to throw this up. It's from Brian. And I love this particular email. I'm going to show you why I threw this in here. This email, a little older. It's from March 16th, but I'll show you why. It says, Don, wow. I want to again say thank you for what you taught me in the last 2.5 years. I bought into what you taught about risk twist spreads, which is what I was talking about tonight, and duration positions, and started to trade options almost a year ago. I missed out on the last market move up, but at the moment, my IRA is up 14.8% for the year. Time out. March 16th. That's the middle, okay, of the most severe crash since the 1930s. This gentleman's actually up 14.8% for the year. What I've invested in TheoTrade has been so worth the money. Thank you, Brian. Okay, and that's the kind of email that I like to get. And again, this isn't about, oh, I made this and I made this. This guy's actually up in the middle of the worst crash, okay, in any recent history. Here's another one from Todd Summerall. And I wanted to throw this one up here too, because Todd's is also huge. Todd Summerall. Hi, Don. Don't know if you remember, but I emailed you a few weeks ago, and you told me my delta was positive a couple thou or more. Basically, what he was saying is he's massively bullish. Okay? You told me smash it, or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. Okay? For your information, before Theo, I had no clue about portfolio delta. Big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want, and I will, Todd. The point that I want to make here is this. Where a lot of people and a lot of education services, they stop short of actually saying like, hey, should I do this? Should I not do this? Listen, at TheoTrade, we have a crew, okay, that is familiar with the brokerage side of the business. We have a crew that is familiar that they've been licensed. We know how to actually smash delta. We know how to, when I say smash delta, I told this guy, you don't get out of your position, you're dead. You're dead. We can actually go into your portfolio, look at it and say, hey, this is the good, this is the bad, this is the ugly. Like, that's what we're doing here. And again, all of this is $297. Again, maximum returns with infinity spread course. The first bonus, we give you 3 months. 3 months access to everything. Daily live trading in the chat room, right? We're broadcasting all day long, people. Everything's archived 24/7. We text out trade ideas, okay? Push notifications, trading indicators and scans, daily coaching sessions, okay? We have 96 classes. We're giving you day trading and swing trading and technical trading, beginners options trading, advanced trading. And the third bonus, of course, we have the class coming up October 6th. And October 6th is right around the corner. Tracking unusual options activity. Go to TheoTrade.com/profit. By the way, if you go right now, TheoTrade.com/profit, you can actually follow me to this, okay, for the auto expected move indicator. For those of you tonight, okay, for those of you tonight, if you were waiting patiently for the indicator, it is at the bottom, okay? It is at the bottom of this page. It's theotrade.com/profit. For those of you that are enrolling right now, and again, if you're enrolling right now, you need not stress about going to grab the indicator. The indicator is all over our site. We're more than happy to share that particular indicator, okay, and many, many more indicators with our clientele. So as you guys are enrolling, again, I know that questions are coming up and I'm going to answer the questions. I have some general questions I'm going to answer first. Again, all you have to do here, by the way, somebody asked this again, you just click add to cart once you get here. Click add to cart, billing information, make sure you put your phone number in there for the text messaging. Either pay $297 or pay $149. And I'll stress this again, there's no risk. The first, 30 people that enroll, there's absolutely no risk for it. All right, let me actually pop back over here. General questions that I'm going to answer, and then we're going to go into specific questions. There's a lot of specific questions in here. And by the way, I am 4 minutes delayed on seeing you enroll. So as you're enrolling, I will read off your name, but it takes me 4 minutes to actually see that. So just bear with me, okay, for a couple of moments. And by the way, I also want you guys to know, after tonight, this is not the last time we have communications. I'm dead serious when I say email me. It doesn't, don't feel guilty emailing me. He's got 3 kids. I spend, about an hour to an hour and a half a day broadcasting live. I usually spend about 5-6 hours a day. I answer emails. I sit here and I trade. I answer emails. It's not a half bad life. And I have to tell you this. So between TD Ameritrade and building TheoTrade, I took off 3 months. And in that 3-month period of time, I sat and I did exactly what I've always done. I just sit here and I trade, and my wife kept coming in and she's like, you're talking to your computer screen while you're trading, and I was like, I know, man. That's what I do. I might as well just throw a microphone and bring clients in here, and that's what kind of started the idea, if you will, for TheoTrade. But we knew we were going to build something before we ever left TD Ameritrade. I had to take off 3 months just to see if I liked the home life. Home life is not all it's cracked up to be, people. Got 3 kids, no school, okay? They're always here, always watching. The only thing I have now is to hide in my office for about 8 to 9 hours a day. So a couple of general questions I'm going to answer for you guys. All right. People always ask this one, so here. What do you need to get started? A laptop. In fact, you know what? I don't even think you need that. I think you could actually use an iPad or a tablet, okay? iPad or any type of tablet, Android. By the way, I have both. I've actually come to play around with, because we have a iOS and all these mobile devices. So I bought an Android tablet. I've got, an iPad. What you really need, iPad, laptop, internet connection. I mean, I'm telling you right now, we want to give you everything that you need to get started from absolute novice to the most extreme. I also I have a shout out to the extreme traders. You think you're extreme? Step up to the plate, because you're going to be shocked at what we can do here. And I really mean that. When I say you're going to be shocked, we have some content and some classes here that go to the, you want to get thrown in the deep end of the pool? Come with me. I'll show you pairs trading, statistical arbitrage, you name it. That's the world I came from. Number 2. This is not a membership. We're not going to auto-renew or bill you again. I've mentioned that about 5 times because I don't like memberships. And when we first started TheoTrade, it was a membership. We took that component away because we found out giving people an option to sign up again, it was actually better for them. It was better for us. We wouldn't have people that are like, oh, I'm so annoyed. I did not mean to sign up for that. I'm going to be gone all summer. We don't want that. We really want you guys, not just to be happy, but to be thrilled with what you're doing here. All right. Number 3, we're providing infinity spreads, a weekly video update, so you can follow all the moves that we make. And I can even take you into that and show you. You're like, oh, what does that mean? You provide an update. So this is TheoTrade, and you have these portfolios. And you can come in here on these portfolios, and there's Black Book Trader, Duration Portfolio, Infinity Trader, okay, Sell Premium Portfolio, and you can actually come into the portfolios and click on Infinity Trader. And when you click on Infinity Trader, it actually takes you to, well, a video. Here's the last one, September 18th. We update it once a week. And all it is to like learn the management style. So you come in here and you click. Okay, there it is. And you can actually maximize that, minimize it, and go to town. So we actually built, again, these weekly videos that I do to update you. I actually do those myself because I do a lot of the infinity spreads. That's my baby. Number 4, we archive everything. And when I say everything, I mean everything. Every word that we spoken here on TheoTrade, we understand that not everybody can watch live trading. Okay, so we archive everything. If you want to see it, you can. If you don't want to see it, you don't have to. Number 5, number 4, I say we would rather overwhelm rather than underwhelm. Okay. Number 5, we're going to provide access to TheoTrade mobile. So tonight you can put in your phone number and it'll text message you, but you can actually also go down and download TheoTrade mobile. You will find that in iOS, okay, and Android. So you can download it and view the archives at your leisure. What's really cool about mobile, you can actually speed it up. You can listen to me at 2 times or 1.5 times the speed. So it actually has variable speeds in there, which is, I sound like a chipmunk already. It makes me worse. Add your cell number when enrolling, okay, to receive text messages. I was just saying that a second ago. And download mobile if you want push notifications. Number 7, you can email us anytime. Now, when you email us anytime, we put this in here. You're going to receive a response within 24 hours. All I'm saying about the email, and forgive me, do not email me with 10 minutes to go to the close on a Friday. It's expiration day. People do that, and I'm like, oh, don't please, because you got to understand, right? I'm here to help, and everybody's here to help. But at the same time, okay, we trade, and only if the market's kind of chill or we answer an email. So you got to give us a little bit of time. The turnaround is usually like a couple of hours. Like I look at our emails all the time. The average turnaround is less than a few hours. For me, it can get a little hectic from time to time, especially when volatility picks up. When volatility picks up, nobody ever emails me on dead days. When volatility picks up, it's a free-for-all, people. It takes me a couple hours to get back to you, but I want you to know you can email me, and it's one of the most important things that we do here. Number 8. You're going to gain access to every course we've ever done in the previous 4 years. Classes, coaching, live trading sessions, everything is searchable. Name a trading topic, name a genre, we've got an archive on it. And I really mean that. Like you name like some crazy type of trading, bet you we have an archive on it. It's 8 instructors, okay, just going at it. Number 9, all the trades that we do here could be done inside of an IRA or retirement account or with as little as $2,000 in the account. Number 10, at TheoTrade, we can help you get approved for option trading at several brokers. By the way, we work with several major broker dealers. E-Trade, TD Ameritrade, and Tastyworks. We have relationships, okay, with those 3, but we have other brokerage firms, okay? Those 3 brokerage firms, though, like Tastyworks, those are the founders of Thinkorswim. I mean, those guys I've been so close to for so many years. Of course, you have a relationship with them. E-Trade, okay? One of my closest cohorts and coworkers, she worked with me for 12 years. She runs part of E-Trade now. Okay, and you come to TD Ameritrade. Some of my closest friends in the world, they still work at TD Ameritrade, which is now Charles Schwab. But it's fine. I mean, we can help you at any of the major brokers. Number 11 here, there's 30 riskless spots are available. Listen, get results, take action, enroll for TheoTrade now. There's no risk to you. Go to theotrade.com/profit. I'm going to answer a couple of general questions that have come up in the chat room over here. If you're interested in this one, by the way, this is another fun one. Just wanted to say, take a second to say thank you. You've actually changed my entire mindset on trading from gambling on individual positions to building a portfolio that manages risk. I still have a long way to go, but today was notable for me. After probably close to a year, of membership, today I found myself managing a position using Delta and actually understanding what I was doing and why. At that moment, I realized this is a whole different ball game than what I thought it was. I've probably lost and left, on the table at least 6 figures because I didn't understand what clicked for me today. So thank you. That comes from Christopher. Anyway, go to, again, theotrade.com/profit. As I said, let me answer a couple of generalized questions. I'm going to pop this back up over here. Let me answer some generalized questions also that came up in the chat. And by the way, for those of you, if you were curious, the 30 riskless spots, let me read off a couple of names. And I said it takes about 4 minutes. I'm going to read off a couple names. Then I'm going to jump back into some of the questions that came up inside of the chat room. Okay, number one, Vernon T. from Michigan. Ronald E. from Montana, James R. from New Mexico, Kathleen G. from Florida, Stephen S. from California, John B. from Tennessee, okay, Zeem, I don't want to butcher this, Zaim, okay, A. from Texas, Greg A. from Kentucky, Peter B. from Victoria, Australia. That is beautiful there. Michael D. from Texas, Robert W. from California, okay, and Shu N. from Washington. All right, with that, I'm going to actually go in now and answer specific questions. By the way, that's the first grouping that I'm just reading off here that just enrolled. Okay, and when I say I'm going to answer some specific questions, and I mean these are the questions that actually popped into the chat room. So Ethan was actually asking, a broken wing butterfly is a similar trade. Okay, less profit but less risk. All right, so a broken wing butterfly actually is not similar to the infinity spread. The broken wing butterfly is actually going to absorb substantially more risk. The infinity spread is much more of an outlier. When you start to learn to build the infinity spread, you will see the vast differential. The other thing is when you start looking at a broken wing butterfly, you actually, in most broken wing butterflies, have what we term negative volatility exposure, meaning you don't want volatility to go up. The infinity spread profits from volatility because it's got extra units out of the money. So it's a vastly different trade than a broken wing butterfly. All right, next one on here. By the way, who makes the expected weekly moves and how? David. The expected moves are all derived, okay, from the option premiums themselves. But the actual expected move calculation, well, that's kind of an age-old calculation that's been used and kind of handed down from market maker to market maker over the years. The expected move equation on Thinkorswim took about 7 years in the making to come up with the definitive expected move calculation. It's not like, some big secret squirrel stuff over there, but the expected move calculation, it's critical, but the expected move is all based on volatility. If volatility is high, the expected move goes up. If volatility is low, the expected move goes down. Okay? All right. So Derek actually asked, how do you set up the IV plus or minus in the TOS platform? Derek, we'll actually show you all that. If you guys, by the way, if anybody here ever has a question about Thinkorswim, okay, I'm going to say this, and I don't even want to come off like arrogant. There's nobody that understands the Analyze tab on Thinkorswim, okay, probably as well as I do. I spent the better part of my career in helping actually build that little monkey in there. We have very, very detailed Thinkorswim demonstrations built into TheoTrade. Okay, we also have a ton now about Tastyworks, which is the new up and coming brokerage firm. So either or, we have very, very detailed files on there, and we have traders that know both of these platforms, okay, like the back of their hand. But when it comes to Thinkorswim, I'll probably be your guy. But almost all of us here at TheoTrade, a lot of us did work, I should say, at Thinkorswim and TD Ameritrade. All right, moving on here, and then I'll name more names momentarily here. But by the way, somebody said, how much risk are you taking? Do you have any actual losing trades? Yeah, Jason, actually, when it comes to the infinity spread, though, in 2020, okay, there hasn't been a big drawdown. Most of the time, when I talk about the infinity spread, you put it on for like $1.39, you lose $1.39. You put it on for $1.39, you lose $1.39. The third, the fourth, or the fifth time you do it, you're annoyed. On the fifth time, you make like $12. You're like, oh my gosh, this works. So you will have sequential losses on these spreads. I will say, though, 2020, it's been a free-for-all. It's just been a total free-for-all. We've never had this many outliers, okay? And not even close to it. Like, you're so statistically far gone right now. I love it. I actually showed you there was an SLV trade that I didn't do well on. There was a Roku trade I didn't do well on. There was an XLF trade that I didn't do well on. So I like to show losing trades. In fact, when you're here at TheoTrade, you'll see me pop losing trades all the time. Take them on, take them off. This business, though, is about controlling that risk. All right. Ron said, for these trades, credit spreads, you need a margin account. So Ron, Yeah, you can use a margin account, but you can also use a an IRA, which is fine. And you can also use the IRA. And when you are trading in an IRA, which is technically is not margin, you're still fine inside of an IRA. So that's yeah, no problem. I can help you on the different accounts over there. All right, next question over here. So Alex was saying, I thought you couldn't do a risk twist with the VIX above 20. Alex must have actually gone to some of our classes at one point. Alex, we're not using the standard risk twist. Now we're actually using a VIX volatility spread, okay, along with that. So Alex, you've been to a class 2-3 years ago. Oh, we had to migrate this right after the Corona crash. What happened is the volatility was high. So I had to reinvent a little bit of the wheel. So I tweaked it. And that's actually what this class is. That's why there's a volatility crash course. It's what the volatility crash course is and a back spreads course because we actually altered it. Love the questions that are coming in over here because that's actually a hardcore one. He's actually asking a question. He's like, clearly, okay, Alex knows that he's taken a course here and he knows like the criteria says you can't do it. By the way, Alex, the criteria is you can't do it in a VIX over 16, man. So now the VIX is at 26. You can do it and you're actually going to do it with VIX vol spreads on there. So one or two more questions, I promise. Okay. By the way, I'm reading off a couple more names. Mela R from Nevada, Dinkar N from New Jersey, Monty J from New York. I'm going to butcher this. Sarvjay Y from Washington. I apologize if I butchered your name. Mark R from Texas. Fujik T from Surrey. Chris L from Pennsylvania. And again, I always apologize if I butchered your name in here. All right. Continuing, one or two more questions. I think we got almost all of them. Okay. Oh, Peter. So it doesn't matter, okay, in which direction it moves. It just has to move. So, Peter, the answer is this. You got to move. But you got to move big. You got to move more than what the options market was anticipating. And that's, when it comes down to it, that's like one of the key aspects in this particular strategy is if you don't move as much as you were anticipated, okay, you're looking at a small loss or, okay, negligible. You could actually break even on the strategy. When you're actually hitting this strategy, you have a little bit of an outlier. It doesn't have to be a drastic outlier, a little bit of an outlier trade, okay, and you're fine in there. By the way, somebody was saying an auto expected move. Why don't you use options of different durations? Okay, so you can actually, Steve, you can actually alter you can alter the auto expected move for any duration you so choose. By the way, a couple more names, and we are almost filled on the 30 names over here. Richard J, and I can't even add it up. I think we have 4 more spots left in the riskless trade. Richard J from Utah. Song P from Minnesota, Randall W from Indiana. Listen, I have run way over in time, and I wanted to answer every single question in here, and I've tried to hit every single one of them, and I'm reading back in here, but I want to let everybody go. And as you guys are enrolling, listen, I will be in chat first thing in the morning. I kick it off. When I say kick it off, 9:22 Eastern Time, 9:22 Eastern Time, 6:22 Pacific Time, I go live. Okay, Monday through Friday, I go live. I like to be the first person on. I'm usually on for about, anywhere from an hour and 10 to an hour to 30 minutes in the morning. Then we actually turn it over to Jeff Bierman. We'll give you the entire schedule in the morning. Pop into the chat room, say hello. You can feel free to chat with all the other clients here at TheoTrade. And by all means, shoot us an email from time to time or fire questions into the chat room. We're here to help. Thanks, everybody, for joining us tonight. Again, it's theotrade.com/profit. Feel free to email us, support@theotrade.com anytime. Thanks, everybody. Have a great evening. Bye-bye.